Get right to CNBC's Eamon Javers with the latest in D.C. Eamon?
Yeah, good morning to you guys. The White House has been insisting all day here in Washington, D.C. on Tuesday that they are going through with the 104% tariffs on China. There was some question earlier in the day about timing of all that, and the White House said, no, this goes into effect midnight East Coast time, so that is about 5 hours from now. Some mixed messaging, though, from the White House as to what the overall goal of this tariff program is. You've got Peter Navarro, the trade advisor inside the White House, saying publicly and on CNBC that this is not a negotiation. This is a permanent state of affairs designed to restructure the entire global trading order. And then you have Scott Bessent, the Treasury Secretary, who was on CNBC earlier today describing this in a very different way and very much as a negotiation. Here's what he said.
If we're successful, tariffs would be a melting ice cube in a way, because you're taking in the revenues as the manufacturing facilities are built in the U.S., and there should be some level of symmetry between the taxes we begin taking in with the new industry from the payroll taxes as the tariffs decline.
So there you have the Treasury Secretary describing this in a very different way. Navarro saying it's permanent, but the Treasury Secretary, who is a more senior official, saying that no, it's more like a melting ice cube. The idea here is that as the U.S. government negotiates individual deals with individual countries, they can pull some of those tariffs off and get those tariff barriers down towards zero over time. That implies there is a massive global negotiation going on. So far, we know that the South Korean delegation is sending a team to Washington to negotiate. The Japanese are sending a delegation to Washington to negotiate. But we don't have a list of the other countries that are engaging in negotiations at this point, although the White House has said that they have upwards of 70 countries that have expressed interest in that negotiation. One thing I should point out, though, at this hour, and it's now just a little bit after 7 p.m. East Coast time, we don't have the paperwork yet from the White House to show that the president has signed the additional 50% tariffs on China into an executive action. So there will be required some documentation and paperwork on that. He has said it on social media. He has said it publicly. But what we haven't seen is the actual documentation of that additional 50%. Remember, the additional 50% came from Trump after China retaliated to Trump's initial tranche of tariffs. So we're now sort of 3 links of the chain into the tit-for-tat retaliation. The White House has not shown us the paperwork, but I talked to an official there today who said that will be executed and those tariffs will go into effect tonight, guys. Back over to you.
Thanks for pointing that out, Eamon. And I want to get your sense of how Washington is reading Beijing's response so far. Rather swift retaliation announced on Friday. Is there any sense that perhaps Washington was off guard? And, of course, the rhetoric has been pretty strong from China as well.
You know, officials at the White House have said that they've warned countries not to retaliate, but you do kind of wonder how they could not expect a retaliation from the Chinese and how they could expect that the president's social media post about the 50% additional tariff would get a favorable response. I mean, you would imagine that for Xi Jinping, the political pressure would be on him domestically if he were to cave into a tweet like that or a social media post like that. So putting the government in Beijing in a position like that doesn't seem to be the way to get to a favorable deal with the Chinese government if that's their objective. It seems like the objective from Washington was to put these tariffs on, put them on hard, and really slow the bilateral trade relationship between the United States and China. That they feel in the White House that over a generation, American manufacturing has been outsourced to China, and this has had devastating consequences for folks in the American heartland, communities across this country where you've seen unemployment, drug abuse, and all sorts of social ills. And they argue that these tariffs are going to go a long way to solving that problem.
Okay. Eamon Javers joining us live from D.C. Thank you very much. So, as Eamon was saying, the paperwork, that executive order, that is coming. But meantime, China is not budging. But as Eamon was pointing out, a team of senior Japanese officials are set to kick off talks with the Trump administration in D.C. Let's get to CNBC's Kaori Anjoji, who is following the negotiations from up in Tokyo. Good morning.
Good morning, Martin. Well, 5 hours, of course, the clock is ticking with the Japanese exports facing 24% in tariffs, 25% for the auto sector, which makes up 30% of Japan's exports. Shell-shocked Japan may be, but ill-prepared it was not. Instead of retaliatory measures, it took a very quiet approach, and things were moving in military precision yesterday. So here's what we know about everyone who's involved in these negotiations, and I mean everyone, because on the right-hand side, if you put up that diagram, you have Minister Kato. He's, of course, going to lead the discussions with the Treasury Secretary. On the left, you have a gentleman by the name of Mr. Akazawa, a very quiet-spoken man, but going to be leading the negotiations with the U.S. trade representative. But those two are by far not the only people. They are just the faces of this negotiation. Behind the scenes for weeks now, bureaucrats have been working to try and negotiate with the U.S. administration because that culminated in that very coveted call between the Prime Minister Shigeru Ishiba and President Donald Trump. And what they're trying to do is trying to hammer out a package, because I've been to many countries, but in Japan, FaceTime is everything. And the Prime Minister Ishiba has said after those negotiations wrap up, he wants to visit with Donald Trump in Washington. Martin?
Kaori, I have to ask you, the composition of the team, the Japanese team, what does that tell us? Because I noticed that the trade minister, and this is about tariffs, right? Trade Minister Muto, he's been to D.C. a couple of times, tried to get tariffs lowered, didn't work. But right now we've got the finance minister, and the other gentleman does suggest that the negotiations are more likely to be about Japan lowering some of its non-tariff barriers.
You know, Martin, I think everything is on the table, and by that I really mean everything. But the problem is when you look at the breakdown of Japan's exports to the U.S., which amount to about 21 trillion yen. I mean, you look at the list, I'm going to look at the sheet here. The top export is automobiles by far. It's 30% when you take a look at auto parts as well. Now, we talked about this a little bit yesterday. Voluntary export restrictions could be on the cards, but here's the problem for Japan. It's going to push Japan into recession. That's what people are worried about. So you want to look on the other side of the table, which is imports, U.S. imports to Japan, because Donald Trump has said he wants better access. But when you look at that table, the top percentage in terms of imports into Japan are pharmaceuticals. The next one I think is interesting. It says industrial products. We're talking about power systems. So here's what the Treasury Secretary had to say to give us a little bit of flavor as to what they may be looking for. We have that
Thank you very much, Kaori, for that. And of course, yeah, we don't have the soundbite ready just yet. And of course, you make a great point that everything is on the table, and pretty much all these countries that are hit by a country-specific, of course, tariffs by the Trump administration is basically trying to engage with the U.S. and flying out there. And Japan is not the only country. I do want to get to a South Korea angle in all this, Kaori, as well, and Marty. And we're also getting some flashes out of South Korea saying that is vowing efforts to ensure that domestic automakers are not treated in a disadvantageous way. They are talking about the support of 15 trillion Korean won this year alone, and they're actually upping that number from 13 trillion Korean won. So there is that, and obviously auto is one of the hardest hit sectors in South Korea, given the, of course, the auto-specific tariffs that the U.S. is putting on certain countries here, or actually across the board, I should say. Let's talk about what we learned from overnight, because there was that phone call, finally, President Trump and acting President Han Duck-soo of South Korea. This is the very first time for him to engage since taking his office. Right after his election victory, there was that phone call with now ousted President Yoon Suk-yeol. Things were good back then. And then, of course, South Korea doesn't really have a leader at the moment, despite the fact that the acting president, Han Duck-soo, did manage to get a phone call this time around. What we learned from the White House side is that they're prioritizing allies in tariff talks. So I think that is a big takeaway. For countries like South Korea, I think shipbuilding and energy deals could be potential areas of focus. In fact, Han Duck-soo gave an interview to CNN saying that he would like to negotiate with Washington. He's not going to band together with China and Japan to sort of beat the tariffs or retaliate. I think that was an interesting point to Marty as well. Yeah. So this is one of the points that we were talking about earlier this week as well, yeah?
That's right, yeah, because, at one stage it sounded as though it was going to be a three-way trilateral sort of approach, Japan, South Korea, and China getting together to respond to the U.S., but now looks like Japan is going its own way, Korea is going its own way as well. You mentioned cooperation, potential cooperation in shipbuilding. That's one thing. Obviously, another way that South Korea could address the trade imbalance with Washington is, of course, buying more U.S. arms.
Oh, yes, definitely. And I think it's just increasing imports from the United States altogether. I think that could actually sort of balance things out here. And that's actually what the trade minister in South Korea, who should be in Washington as we speak, did say to reporters earlier, well, actually just overnight as well. So we'll definitely be watching. But I think the starting point is quite tough for the trade minister because he really needs the Trump administration to understand that they have a bilateral free trade agreement. So the tariff calculation itself coming up with a 25% number, that's not correct. South Korea is trying to explain that. Let's see if the Trump administration, I don't know, hears him out.
Yeah, the math of the numbers can often get confusing, understood. So, Sherry, as we've been talking about, China isn't backing down despite those 104% U.S. tariffs, which are set to kick in just after midnight Eastern, which is noon Hong Kong, Singapore time. And that is our big number today. Again, that means imports from China into the U.S. get hit with a total of 104% tariffs if China does not scrap its retaliatory tariffs of 34% on the U.S. But Sherry, talk about confusion with the numbers. Some folks remember back to Trump's first term and go, hold on, wasn't he the one that sort of kicked off this whole trade war with China by slapping tariffs of up to 25% on some products? And if you work that in, it gets more like 129%, close to 130% tariffs.
Exactly. And this is the very point folks at the Peterson Institute were pointing out as well. So they're going with additional 20.8%, and that's a rough number. And this is a number that could be different for different products as well. But we're not talking about 104. We're talking about 120-something% on Chinese goods imported to the United States. Just as a reminder, the tariffs that did exist before the Trump second administration began here. So I think just because of the sheer number itself, the big number itself, that I think many in the markets and the world are actually questioning how sustainable, how real, how serious this can get. And I think, we just talked about the market, the U-turn that we saw on Wall Street. Maybe in the beginning that people thought that, come on, the Trump administration cannot go ahead with this. And then Trump says, we're forging ahead. And I think that could be another layer in the U-turn that we saw on Wall Street overnight.
Yeah, it looks like yes, it can. Anyway, all right.
Yeah. And of course, we got lots to speak about, of course, today as we approach that critical mark. As Curry pointed out, we're counting down less than 5 hours. And later, we've got S&P Global Ratings, the global chief economist, Paul Grunwald, on U.S. recession probabilities. And later in the show, Ruchir Sharma, of course, Rockefeller International, talks to us all about what he thinks went wrong with capitalism. All of that on Squawk Box Asia. Stay tuned. We'll be right back.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. CNBC.com/technology.
I've always had an ambition to do something I love. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
This is a good global debate.
There is no place in the world where we get the kind of access to so many amazing interviews.
To be able to solve problems at a scale that nobody's ever imagined.
This industry is going through its renaissance.
How big a game changer is this?
Let's go. A CNBC original exploring equality.
My quote since the beginning was, don't change yourself, change the game.
If you want to be more innovative, more creative, come up with alternative ideas to solving problems, you've got to be more diverse.
And LGBTQ rights and our acceptance are on the line all over the world.
We have something to bring to the table for the solution that we can find together in this fragmented world, and music is always at the center of it.
Real lives, real stories. Only on CNBC.
Welcome back. It's a midweek Wednesday here on Squawk Box Asia. I want to show you how treasuries are pricing. Take a look at the benchmark 10. We are up almost back at 430 right now, believe it or not. Short end twos at 372.97. So the head scratcher is this. We have lost such an incredible amount of ground in equities, yet the 10 is back where it was before Liberation Day. So go figure. CNBC's Rick Santelli has the latest in today's bond market report. Take a look.
Good morning, Asia, Australia, New Zealand. Well, tomorrow we start to get some economic data, wholesale inventories and trade, and then later in the afternoon we'll have the minutes to the last Fed meeting. The big data points, of course, are going to start on Thursday. And on Thursday we're going to have CPI, and on Friday we're going to have PPI. Those are the biggies of the week. As far as today, well, what we did have was the first of three auctions. We had a 3-year note auction, $58 billion, and it did not go well. Very weak demand, it tailed, and it turned the market. After 1 o'clock Eastern results, interest rates went from slightly lower on the day to higher on the day, and it was led by long maturities, and the curve steepened to over 50 basis points for the first time in 3 years. Actually, February of 22, a little over 3 years. If you looked at the equity markets, they were super strong early in the day, and as the notion of tariffs in China became the talking points of the day, it started to lose ground. It did manage to get some green back, but nowhere near the amount of green, especially in the Dow, that it had earlier in the session. When you do look at interest rates, not only did the curve steepen, but what we really want to talk about is how long rates have gotten so much more buoyant. And remember, as we focus on tariffs and try to divine if it's a one-time inflationary shock, if it happens at all, or is it more of a lingering effect, well, we really don't know that outcome. But when you have debt and deficits the way we do, a weak 3-year note auction and 10s and 30s to follow, it certainly seems as though the longer maturities are much more alive to the upside than they have been. And I think we want to pay very close attention to not only did we hold 4% on a closing basis this week, but we are now at that 4.25 level. And should we start to close above that after having exactly a 4% low yield close on this move, that would go a long way on the technical side to bring in more selling. Reporting from the CME HQ, I'm Rick Santelli, CNBC Business News, Chicago.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
If you're watching CNBC, it's because you want to get an edge. You want to get ahead. It's our job to deliver that. My ambition is just to be the best that we can possibly be. More often than not, I kind of forget that the cameras are there, but when there's really a burning question, I'm thinking about what my mom would want to hear. I'm thinking about some of the investors I know who are watching. Those are the same questions we have. People always ask me what I want to do next, and I always think they're a little crazy. This is what I want to do. It's the best job you could possibly have.
You're back on Squawk Box Asia on a midweek Wednesday. Let's get straight to Paul Grunewald, Global Chief Economist at S&P Global Ratings, joining us live. Paul, great to see you again. Always a pleasure having you on the show. So we're counting down to a total of 104% tariffs on China, set to kick in a second past midnight. Some folks think the numbers should be actually even higher when you factor in the tariffs that President Trump dropped on China during his first term. But, you know, regardless, these are huge numbers we're talking about. My question to you is, can China handle this, given that its exports to the U.S. account for less than 3% of its GDP?
Yeah, well, thanks for having me back on the show. Well, obviously, we're on uncharted territory now with the level of tariffs. But, you know, when we're thinking about countries and how they might respond to the U.S. Raising tariffs, we've got a small number of countries or economies. China's one, the European Union's probably another one, that are likely to try to retaliate and do this kind of tit-for-tat strategy. So we know that some of the smaller economies in your region, like Vietnam, don't have a lot of bargaining power with the U.S. But, you know, China was very quick to respond to match the 34. They're going to see another 50. We'll have to see if this game continues to play out. And remember, the tariff is like you put a higher price on your own citizens, and then you get sort of the political blowback on that, which is a very funny dynamic when you think about it. But we'll see how both sides continue to play out. But as I said, uncharted waters, and we'll have to just watch the dynamics and including the politics and see what happens.
And Paul, this is a rather regular exercise for every single tariff episode between the U.S. and China, but which economy is better positioned to fight?
Yeah, I mean, there's the economic measure, and then there's the political measure, and those are kind of different. I mean, everyone loses from tariffs, right? You're kind of shooting yourself in your own foot, in the sense that, you know, most of this comes back and is paid by domestic consumers. So we know that from an economic point of view, there are no winners. I guess this is kind of like a game of chicken now, right? We keep getting escalations from one side that are matched from the other side, and we'll have to see, you know, who blinks first, or maybe we can find a path to de-escalate, which would be the good scenario in our point of view. But it doesn't look right now like any side is prepared to blink. So again, got to see how this plays out and see if we can find a path to de-escalate.
And we got a lot more with Paul Grunwald. Paul is staying with us. We are going for a quick break here. Squawk Box Asia is coming right back.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
Learn how to start generating additional income right now. Register at cnbcmakeit.com/passive income today.
Time check, 7:30 a.m. Hong Kong, Singapore time. So we are less than 30 minutes away from Tokyo coming online. Futures are handicapping what looks like another negative start again. Dollar yen, we're changing hands at 145.67 as we speak. And futures are up and running and rolling. U.S. futures at this early juncture Wednesday in Asia, handicapping, looks like more downside when Wall Street gets back up and running tonight, Asia time. Sherry?
And we are back with Paul Grunwald of S&P Global Ratings. Paul, thank you for sticking around. I want to get to the yuan question after that warm-up on China. You recently made a point of how the Chinese yuan has really made a lot of progress as a trade currency, really going out into the world through a lot of initiatives and doing a lot of trade and a lot of trades taking in place in RMB. How does that work in this particular tariff dynamic? Does it pressure Beijing not to devalue even if there is an impulse to do that right now?
Yeah, I think that's a correct characterization. The RMB is still mostly a trade currency. It's not a store of value. It's not a reserve currency. So, if we're going down the trade war path, which we certainly are on, this could widen to include services. It could widen to include sanctions. It could widen to include the currency. So the currency weakening as another weapon is something that could be employed. But again, we're on this path now, and I think at some point everything's going to be in place. So again, we're gonna watch and see how the tit for tat evolves and whether it broadens beyond goods trade. There's no reason to think that it may just stay in that very narrow lane.
If Beijing were to do this, devalue its currency to, raise the appeal of its export items pretty much around the world, how will they carry that out? Just for the last couple of days, well, actually Monday and Tuesday, we've been seeing this midpoint yuan fixing, and one of the guests earlier this week described it as a messaging that here we go, this is what we're attempting to do. Do you agree with that?
Yeah, well, the midpoint, I'll put on my Asia hat since I spent a lot of time in the region. The currency is not free floating, so that midpoint, that set is a signaling device, right? And if the authorities are intending to weaken the currency, they can use that midpoint as a signaling device. I'm not sure that there's a big export advantage to weakening the currency. There's a question about the price sensitivity. So I think that was once upon a time maybe that worked better with China, but I'm not sure you get a ton of bang for the buck on your export weakening the currency. It's part of the toolkit, but I wouldn't expect that to be sort of the main measure as we kind of go down this escalation path.
Hey, Paul, let me quickly jump in here. I mean, the midpoint always on weekdays is set 9:15, so we've got a little while to go before we see what they do. But so far, the last 2 or 3 settings, they've moved in baby steps, right, to let the currency soften. Is it too early to tell what their real intentions are, whether or not we're looking at a potential, repeat of 2015 when we had a big one-off devaluation? And of course, this was during Trump 1.
Yeah, I mean, that would be sort of the big thing to watch, right? Kind of the weaponization of it. If you get a very large downward move, I think I don't track it personally on a day-to-day basis, but I think, describing sort of baby steps right now, maybe directionally sending out a signal is kind of the conservative. If you wanted to really send a message, I agree. You do a fixing that was much weaker, and that would sort of signal that the currency might be in play.
Paul, I got to ask you a broader question, right? Right now, the approach that China is taking is it's the only economy which is not caving. It's not trying to come to the table, asking for meetings or phone calls. It's digging in its heels, right? We've seen the 34. Okay, 34 back at you. What is the risk that this could go even broader and become a full-blown, fuller spectrum sort of confrontation between the two sides? I mean, right now we've got goods. Does it go into currency? Does it go into services? I mean, how bad do you think it could get? I'm thinking here also of whether they could weaponize their holdings of U.S. Treasuries.
Yeah, well, I think, again, it's starting in this narrow lane of goods. Even the Europeans have floated the idea of, some sort of action on U.S. services. The U.S. is a surplus service exporter, so I guess there's more vulnerability there. But, I don't have the playbook in front of me, but certainly if we go down the road and we're past 100% now on tariffs on both sides if the Chinese respond to the next one tit for tat. And I think, again, everything is potentially in play. Services potentially in play, currency as well.
And obviously, the big question that we're asking this week is how will these tariff negotiations will go and what all these countries can put on the negotiating table at the moment. We don't really know a lot of answers at the moment. Having said that, Paul, what would be the implication going forward for these tiger economies such as in Asia, such as South Korea and Japan, that have been really working hard to build that alliance, a strategic alliance with the United States? I would imagine they are busy negotiating at the moment. What would be the impact from the 26% tariff if they actually hold for a while?
Sorry, if they actually held for a while? Is that the question?
Yeah.
Yeah. Well, the pain is going to be probably back on U.S. consumers. So the price of imports from Japan and Korea are going to rise, and then all the trading partners are going to rise. And the question is, how much of a dent is that going to put on? How much of a dent is exports from Korea and Japan into the U.S. market? If this is kind of a nominal event, and U.S. prices go up and the tax cuts go, and we don't a material slowdown in the U.S., that's a that's a kind of an episode where the U.S. consumers actually have part of the pain. The distribution of the tariffs is key, and we're thinking a lot on my team. Do the consumers in the U.S. pay the tariffs? Do the exporters pay the tariff? Or do the importers into the U.S. pay the tariff in terms of margin compression? If it goes back into margin compression on the exporter side, which would be sort of the pain on Korea and Japan, that's where, you could maybe get them to the table. But it's not clear because empirically, I think most of this stuff passes through to final consumers in the U.S.
Paul, listen, let me quickly jump in. The president is speaking at the NRCC dinner. Let's pause and take a listen.
All right.
I wonder if you ever turn the room this way. It's interesting because I love real estate. I love ballrooms, have nice ballrooms, a lot of them. I wonder if they ever turned it this way instead. So it might be interesting. This way I'm not talking to a wall. They think they get a better view, but actually I'm not sure. But next time maybe we'll have to worry about that next year. Well, we'll do 45 or 50 million, right? I mean, a lot of people, you broke your record attendance and you broke your money record, and that's a great tribute to the Republicans and the party and everything it stands for. And it's wonderful. And I want to thank especially Speaker Mike Johnson because he's been incredible. And we have some unbelievable supporters of our House Republican majority with us, as you know, and with the help of everyone in this room. The next year's Republican Party is going to defy history. We're going to really defy it, and we already are. We're getting things done. It's going to be very interesting to see. This is going to be a very interesting year. We have an interesting time. We're making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day. I get hit by the press about tariffs. We're making $2 billion. This isn't 35 million, that's peanuts. $2 billion a day. And then they say, gee, they don't know. This is only the enemy can be talking this way. In addition, we have a lot of countries coming to see us. They want to make a deal. And we're doing things that nobody's ever even thought about doing. And we're going to defeat the radical left Democrats who are out there complaining about everything. All they do is complain, and then they want to put men and women's sports and things like that. They want men and women's sports. They're still fighting for that. I saw this poor guy. You all know him. I won't mention his name. He's sort of a nice guy. He's a loser. He's a Democrat, but he's a loser. And he was fighting on a big show this morning. We got to have that. It's not fair that essentially that men aren't allowed to compete against women. Can you believe this guy? But let them do it. I say we shouldn't be fighting a lot of these things. Just let them go. And then just before the next election, we'll unleash on them. Because it would be very sad if they actually change their policies. We don't want that to happen. But we're going to win the midterm elections, and we're going to have a tremendous thundering landslide. I really believe that. And it's so important that we pass the big, beautiful bill, because that's going to be, and I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch, legendary in a positive way, I have to say. It's going to be legendary. But I really think it actually puts pressure on those few Republicans that just can't get there. You know what the alternative is? A Democrat bill or a chapter for the country. We have the debt continuation. And they have to do this. They have to get there. And I think we are there. We had a great meeting today. I think we are there. But just in case there are a couple of Republicans out there, you just got to get there. Close your eyes and get there. It's a phenomenal bill. Stop grandstanding. Just stop grandstanding. Boy, oh boy, oh boy. Their policy, the Democrats, is horrible. It's horrible. Think of it, open borders. Just all of the horrible, stupid things they have. You don't have energy. You don't have anything. They've lost their confidence. Everything is bad. But the one thing, they always vote in unison. You don't see somebody that's holding up. I'm going to hold up. And the alternative is hell. The alternative is hell. So the Republicans just have one little thing.
Just listening to President Trump there speaking live at the NRCC dinner, repeating his line that tariffs are generating $2 billion with a B in revenues for the U.S. government per day, he's stressing. All right, I'll continue to monitor that speech. Meantime, let's get back to Paul Grunewald still with us live, S&P Global Ratings, and the impact of tariffs, Paul, on China. I'm not sure where you put the growth for China, whether it's 4% or below. Goldman is at 4.5% GDP growth for China, and it says, come a second past midnight, if that extra 50% gets slapped on, that number goes considerably lower. How low does it go for you?
Yeah, well, actually, our latest round of forecasts got derailed by Liberation Day, so we're taking another look. We were at 4.1 for China. We're probably going to be moving that lower, but also we're going to be moving the U.S. lower as well. It's not clear, which one gets dinged more. Again, there's no winners in a trade war, so I think both sides are going to see lower growth and higher inflation forecasts in our next round, and probably lower employment as well. So again, it's kind of a domestic pain threshold game because you've got pretty symmetric damage on both sides, and if you continue to go down this road, the damage gets bigger. So again, we're going to see how the pain meter goes and who's going to blink first and whether there's an off-ramp.
And, with President Trump wanting to bring a lot of capacity, manufacturing to the United States, Paul, there is this new narrative around what can be brought to the United States. And people were talking about the example of Hyundai Motors, a new plant, of course, in Georgia. And people were saying that this doesn't really create a lot of jobs out there, but it's really robots building cars. Do you just have a line on how the automation of a lot of manufacturing could be something that is, I don't know, overlooked by President Trump?
Yeah, well, you have to go probably to the auto experts for that. But, obviously we already have the Koreans producing cars in the U.S., the Japanese and the Germans. BMW is actually the biggest automotive exporter from the U.S. I would think part of the potential negotiation is over, doing more manufacturing by foreign automakers in the U.S. It does generate local tax revenue. It does generate employment. But let's remember that, U.S. manufacturing employment has been falling for decades. German manufacturing employment has been falling for decades. Chinese manufacturing is now falling after it peaked. So, as countries develop from agriculture to manufacturing to services, manufacturing employment falls. I mean, that's just part of the deal. So there may be some reshoring for industries that are already working or producing in the U.S., but for a lot of trading partners, there's very little prospect of bringing things onshore in the U.S., and then it's going to be, who eats the tariffs, and most of the evidence suggests it's going to be U.S. consumers who are going to pay that.
Thank you very much, Paul, for joining us today. That was Paul Grunewald of S&P Global Ratings. Squawk is going for a quick break. We'll be back in 2.
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. And my ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Swiss luxury watchmaker Omega did send their Speedmaster Professional to the moon in 1969. More than half a century later, Omega is partnering with Swiss startup ClearSpace to support a world-first initiative, cleaning up debris from space.
For 60 years, we've been putting satellites into orbit, and we essentially don't remove them.
One of these big pillars of our DNA is of course, the space odyssey. Looking at this, Omega always been very much involved in what's happening in the sky. In 1962, we had the first ever Omega in space by Wally Schirra, his own Speedmaster.
Most of our economy depends on space infrastructure. We cannot live without them anymore. So what we need to do is create an environment that is just self-sustaining. We don't yet have the exact launch date. It's probably going to be more around 2028.
sponsored by...
To report earnings. The airline cut its guidance back in March, but analysts are expecting the airline to show strong results for the first quarter, which is typically the slowest quarter of the year for airlines. Constellation Brands is due to report earnings after the market close. Plus, the Federal Reserve will release its minutes from its March meeting, where the central bank decided to keep interest rates unchanged. And finally, Amazon is expected to launch its first batch of 27 Project Kuiper satellites Wednesday as it seeks to compete with SpaceX's Starlink to provide broadband connectivity.
CNBC. Live ambitiously.
Journalism was always the perfect career for me. I've always been an egghead and a nerd. When I'm covering tech, my job is to really take these wonky and complicated topics and distill them down so anyone can understand. Ambition definitely fuels the tech industry. There's still this air of possibility when a new tech product comes out, that it can do anything, that can change the world. There's nothing better than breaking news, jumping on camera and telling everyone immediately what they need to know. I love what I do. No day is the same. I couldn't imagine doing anything else.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation and startups from one place. cnbc.com/technology.
And we were listening in earlier, moments ago, President Trump is speaking at the National Republican Congressional Committee dinner, and this latest line coming through, he's saying right now China is paying a 104% tariff. Remember, we were just doing the countdown. We've got a little over 4 hours until the midnight of course, kickoff for this country-specific tariffs, but he is, I don't know, preempting that. But remember that we were also talking to our U.S. colleague Eamon Javers at the top of the show, and he was pointing out that the paperwork that would be necessary, required for these tariffs to go through. We're talking about that extra 50% on China hasn't been done, hasn't been submitted, has not been done just yet. But we've got President Trump saying that it is. It has taken effect, and of course, this could be just part of the rhetoric that we're seeing in tariff tension between the U.S. and China, and we'll be watching the related developments as well. Marty?
Yeah, Dean Naaman was pointing out that one of his White House sources was saying that that documentation, that executive order is imminent. Yeah. So I guess we'll be seeing that paperwork soon. Sherry, let's take a look at oil, if we could. It's still under a fair bit of pressure. There's the pricing. You've got front-month NYMEX at $57.50, down 3.5%. Brent, the global benchmark, we're at $62.82 right now. So oil dropped precipitously again overnight. SocGen, Societe Generale, recently cut its price target for oil, sees Brent at $60 a barrel. WTI, West Texas Intermediate, at $57 a barrel by the end of this year. But if a U.S. recession is factored in, well, that number could drop lower to the low 50s. Although that is not their base case. We're also watching metals after the White House announced it's going to exclude steel, aluminum, copper, and gold from reciprocal tariffs. Let's take a look at gold. Spot prices right now, $29.70. So we're a significant way off of record highs hit not too long ago. 29.71 and change a troy ounce right now. And finally, take a look at base metals as well. There's the pricing there. All right. Let's get to Ben Hoff, Global Head of Commodity Strategy and also Research at SocGen. He joins me here live around the desk at the SGX. Ben, great to see you. You're just in from New York, I know. With the clock ticking to that midnight deadline for a total of 104% tariffs on China kicking in, what are you thinking, especially on the commodities, especially on the ag side?
First of all, thanks for having me, Martin. Lovely to be here. Look, I mean, this is really a massive hit potentially to demand. I think we're going to have to see for a variety of markets that aren't ags-based what actually ends up getting negotiated away versus what ends up being, from a tariff perspective, part of a reset of U.S. industrial policy. For ags, really, the impact is going to be most predominantly felt within the beans complex.
Soybeans?
Absolutely, exactly. But really across the board, bean oil, bean meal, bean products, really, that's really where the pain point lies most likely.
Okay, sure, of this.
What about crude, Ben? And, people are talking about potential stimulus coming out of China, but you don't really expect a major support for crude demand boost in China. Why is that?
Yeah, so Sherry, that's actually a really good point. The issue really when it comes to Chinese demand and demand growth is that it's really moved significantly over the past couple of years from being transportation fuel demand to now being exclusively petrochemical demand. That's where demand growth sits, and that part of demand growth is really sufficiently linked to exports for us to think that stimulus is not going to be enough to save that. We're looking for this year at roughly 250,000 barrels of Chinese demand growth. That was prior to tariffs, obviously, but those are very clearly at risk with or without stimulus.
What about OPEC plus a decision next month? Because they are set to add more barrels next month. Do you think they will go ahead and they can afford to go ahead with that?
Again, a very good question, that, Sherry. From our perspective, the news flow surrounding OPEC is a little bit of a storm in a teacup. I think it's worth bearing in mind the context here. OPEC announced, obviously, last week, in maybe unfortuitous timing, that they were bringing back 411,000 barrels of production as part of a rollback of the additional voluntary cuts starting in May. The market was anticipating roughly a third of that, 140,000 barrels. But truth be told here, from our perspective, this looks a lot more like OPEC restating officially the status quo, where you've already had Kazakhstan, the UAE, and Iraq, each producing in excess of 300,000 barrels of their target. So when it comes to this number, our view is that it's actually going to only be probably on the order of 200 to 300,000 incremental barrels that'll be hitting the market in May, rather than that very big headline number of 411,000.
Ben, I want to take it up to 30,000 feet, right? And neither side, the U.S. and China, are talking just yet. When and if they do get down to brass tacks, right, and start to cobble together maybe some sort of deal, right, how much would energy figure into this? I mean, obviously the U.S. wants to sell more energy, whether it's crude or more probably LNG. Can you envision that being part of any sort of deal between the two sides?
I think, again, that's a really good point, Martin. I think very much when it comes to a potentially negotiated unwind of these tariffs, it's really the energy piece and specifically the LNG piece where the needle could be moved. Just bear in mind, China last year imported of its overall LNG imports only 2% from the US, and that is down very significantly. So there is definite room to move the needle on LNG imports from the U.S. as a potential concession.
And the geopolitical point would be to wean China off cheap Russian oil, obviously, yes?
Yes, that would obviously, that would very much be in focus as well, although probably much more of a somewhat related but separate topic, which is how does Russia-Ukraine get settled?
All right. Listen, Ben, wish we had more time. We don't, but thank you so much for dropping by. It's great to talk to you. Safe travels, and see you again very soon.
Lovely. Thank you, Martin.
Pleasure
Thanks
is
for having
ours.
me.
Ben Hoff there from SocGen joining us live. And stay tuned. We've got market opens just ahead. Tokyo, Seoul, and Sydney coming up right after this.
Frank Holland, Worldwide Exchange, CNBC.
Swiss luxury watchmaker Omega did send their Speedmaster Professional to the moon in 1969. More than half a century later, Omega is partnering with Swiss startup ClearSpace to support a world-first initiative, cleaning up debris from space.
For 60 years, we've been putting satellites into orbit, and we essentially don't remove them.
One of these big pillars of our DNA is of course, the space odyssey. Looking at this, Omega always been very much involved in what's happening in the sky. You know, in 1962, we had the first ever Omega in space by Wally Schirra, his own Speedmaster.
Most of our economy depends on space infrastructure. We cannot live without them anymore. So what we need to do is create an environment that is just self-sustaining. We don't yet have the exact launch date. It's probably going to be more around 2028.
Sponsored by...
I strive to be intellectually ambitious. I want to be making connections, finding the right data so I can help our viewers see around corners. I'm based in Los Angeles, and talking to VC investors or Hollywood executives, I have a unique perspective on what's going on in this incredibly fast-changing world. I love being a business reporter. In covering technology, I'm reporting on change. Ambition can create change.
Good morning, everybody. I'm Sherry Kang in Hong Kong.
And good morning, folks. I'm Martin Sung in Singapore. These are your headlines this hour. We are on tariff countdown. Just 4 hours to go, less than that, in fact, before the U.S. President Donald Trump's reciprocal tariffs kick in, and China is going to be creaking under a total 104% levies ahead of that. You've got futures nervous. They are edging lower.
China's offshore yuan hitting all-time low, inching closer to the 750 handle. A weaker currency could help make Chinese exports more attractive to other countries as Beijing's trade war with Washington escalates.
Plus, South Korea rolling out emergency measures to help prop up the local auto industry hit by U.S. tariffs, raising financing support for car makers and lifting subsidies for buying EVs. Right to our top story of today. In just the last couple of minutes, we had U.S. President Donald Trump saying that China is paying 104% tariffs right now, although it sounds as though he is anticipating what is actually about to happen just after the stroke of midnight Eastern time. Because there's still 4 hours to go, but less than that before that deadline. That's when country-by-country duties kick in, and China, meantime, is is staying defiant, saying it'll fight till the end despite getting slapped with stiff tariffs. Again, the number that we are working with right now is just a second after midnight. Tariffs go up to a total of 104% on imports from China. Ahead of that, this is how futures are pricing. They are handicapping what looks like a more give back or downside when Wall Street gets back up and running tonight, Asia time, after just another wild session overnight. The market was up as much as 4%, then turned tail, gave it all up and more. Sherry?
Yeah, and we've got markets in Japan and South Korea, as well as Australia, of course, just coming online. And we've got pretty much right across the board. Quite interesting how the Kospi is looking very resilient, staying very close to the break-even point. Perhaps it's really the phone call, the very first one, by the way, between President Trump and a leader in South Korea since he took his office. And we are looking at, Nikkei 225 giving up a 1.7%, ASX 200 also down close to 1% as we speak. And really zero in on a winner, if you can call it that, the Kospi. Of course, the phone call is interesting given that we learned some things in terms of how the White House is putting priorities on some of its ally countries, and that is coming from the White House economic advisor. So that is one thing. And let's perhaps zoom in on South Korean automakers after the government, of course, announced extra support measures. They actually upped the amount as well to 15 trillion Korean won. Although we don't really see a lot of positivity playing out here, the government is definitely watching this particular sector as it's believed to be one of the hardest hit sectors. And then we're checking in on the defense names as well as the shipbuilders. I point them out because they are the major Trump trades. This is a sector that we've been seeing as sort of standout winners in South Korea since his inauguration day, in fact, his election days as well. But we don't really see a lot of upside coming through for the defense names. Perhaps the shipbuilders are doing better. There we go, because the market believes that this is an area where South Korea can actually offer help to the United States when it comes to the commercial side as well as the Navy side. So I think that's the market's thinking, sending these shares higher at the moment. Marty?
All right, Sherry, it's probably a good time to take a look at what's going on with the currencies as well. And, of course, the big focus is on the Chinese currency, the renminbi, because the H's offshore, if we can bring up that chart, are at a record low right now with less than 4 hours to go before those U.S. tariffs on China of 104% kick in. And we're watching the Chinese currency because potentially it could be one way for China to absorb the impact of those tariffs by using the currency as a buffer. And what we've seen in the last couple of sessions is in the daily fixes at 9:15 Hong Kong, Singapore time sharp on weekdays, the midpoint for the currency, China has managed it or fixed it incrementally lower with each day. So it's baby steps, but the big risk or worry is, are we going to see, as we did in Trump's first term when he slapped tariffs on China, a big one-off devaluation in the renminbi? Excuse me. So right now, H's, we're at practically 740. Folks are calling 750. Some people are worried about even this cross hitting an 8 handle here. So I don't know. Baby steps right now, Sherry, but the way it's going, I think a lot of people are worried.
Yeah, and baby step, I think that is the perfect way to describe it, because many are saying that if that is the intention for Beijing, for the PBOC, that you will actually do it in a gradual manner. And we've got President Trump pushing for that 104% tariff on China and really preempting that by a couple of hours as well. And does it, I don't know, bolster Beijing even more to weaponize its own currency? And let's not forget about other currencies that are reeling as well. I mean, I have to point out, the Korean won at 1486. So that is the weakest since, I believe, so the dollar is highest versus the Korean won since December. So, and, when we're talking about, currency like the Korean one, and many are too, because of their heavy trading relationship with China, they tend to actually go with the Chinese yuan. So what is the implication for that? And this is not really the point where we talk about weaker currencies that tend to benefit exporters for these countries as well. Marty?
Yeah, where the renminbi goes, a lot of other currencies follow. It's almost inevitable. Meantime, though, positionally, China is defiant, digging in its heels, right, saying it'll fight to the end. So, nope, it's not talking. I'll tell you who are talking, though. We've got a team of senior Japanese officials kicking off trade talks with the Trump administration in D.C., and CNBC's Kaori Anjoji is following those negotiations from the Japanese capital, Tokyo. Good morning.
Good morning, Martin. Well, we should start talking about the real economic impact on Japan, because the Japanese economy is in a very precarious state. I mean, economists I speak to say that the range on the impact on GDP could be minus 0.3 to minus 0.8% is the highest estimate. And the Japanese economy really can't afford that at this point, because in the first quarter, you had consumption probably under pressure because of price pressures, especially at the supermarket. So we have, negotiators in Washington talking to the Treasury Secretary, but ahead of those talks, here's what the U.S. Treasury Secretary had to say.
Look, the Japanese are military partners, they're economic partners. We have a substantial imbalance with them, and I'm sure that they are as anxious as we are to get this remedied.
But looking at everything that is on the table, the USTR, of course, will be leading negotiations on that front as well. We got a hint of that from their representative overnight as well. Agricultural products and industrial products. Guys?
Kaori and Joji there. Thank you so much for that report. And let's take a look at how stocks in Tokyo are doing with the tariff drama. Well, actually, before that, let's go back to Kaori in all this. And I actually wanted to ask you this for the last couple of days, Kaori. And when it comes to Japan situation, there's also the domestic politics that we need to think about, given that Prime Minister Ishiba is not running on such strong popularity at the moment. What would be the implication going forward for the Japanese leadership if these tariffs end up hitting Japan so hard?
It's an interesting question, but I think right now Japan wants to make this a united front, and it's a full court press. And I think the opposition is edging towards a place where they say, look, we need some better leadership than Ishiba. But remember, he's one of the first guys that got on the phone with Donald Trump, and he wants some FaceTime. That possibly could happen. So I think maybe right now is not the time. But you also have to remember that this is an election year. There will be an election coming up in the summer. If there's a no confidence motion passed against him, we could see a dual election as well. So he came in as a very weak candidate. But I think at the present time, I don't think anyone, including the big companies in Japan, and by that I mean Toyota and everyone that's linked to that company, want a change of leadership right now. Sherry?
What is the narrative around BOJ playing out in the markets at the moment? Because in the case of South Korea, for example, Kaori, we've got the Bank of Korea may get a little bit more dovish. That is the market speculation at this point in time, although they don't want to be fanning inflation down the road. But I would imagine it's a different kind of a rate action for Japan, potentially?
It's a tricky situation that the Bank of Japan is in right now. I mean, it was tricky to begin with. So let's dial back to pre-tariffs, okay? This was another world, and it looked like the Bank of Japan was ready to normalize, and by that I mean raise interest rates, particularly because the food inflation was hitting the consumer hard, it was hitting consumption, and finally looked like this 2% target that the central bank had been talking about all along was within reach, and wage growth, at least for this fiscal year, seemed to be on a par with that. But this whole Trump situation and the tariff situation throws that into doubt, because you are looking at a possibility, a real possibility, that Japan will be brought down, dragged down with a global recession. So that makes it very tricky. The one point I think would, I don't want to say easy, but for the equation for Bank of Japan is the yen. And Donald Trump and others have been saying that using the currency to make exports, Japanese exports, more competitive is a strategy that they want change. So by that, you would mean that they want to look at the yen strengthening. Now, look, the Bank of Japan was a hard-won independent, so I think it's going to be very difficult for them to say that that is the reason for them to do what they are, that possibly what they do. But this puts them into a very, very difficult situation because not only do they have to think about monetary policy, they have to look at fiscal policy and the political pressures, which are enormous right now.
Carrie, thank you so much. And of course, it's always great to have you on. And, you know, let's actually keep that FX board up there and broaden out for the Asian crosses, because I do want to make a correction for the Korean won. I mentioned it is the weakest level versus the U.S. dollar since December at the top of the show. It is actually the weakest since March of 2009. Versus the U.S. dollar, and I would imagine that makes much more sense here. So we've got the Korean won at 14.86 per dollar, and the Japanese yen at 145.65. And let's take a look at how stocks in Tokyo are doing with the tariff drama. Lin has the market action. Lin, Nikkei 225, given back some of yesterday's gains, a similar dynamic playing out on Wall Street as well as other regional peers as well.
Yes, good morning to you, Sherry. Indeed, so unable to hold on to some of that recovery yesterday, given what we saw overnight, the fact that the White House is pushing ahead with those 104% tariffs on China. That certainly weighs on the sentiment, given that these are the two largest economies in the world, and overshadowing hopes by the market here that there could some sort of a trade deal negotiated between the US and Japan. We're hearing that rhetoric, although we're talking about very, very early days now. In the FX space as well, we've seen a renewed sort of piling into the Japanese currency overnight. That will add an additional headwind for Japanese equities, particularly exporters today. And, you know, interesting because we were just hearing from Kaori talking about the Bank of Japan. We do have the Governor Ueda making some comments this morning and basically reiterating that, you know, they are watching and analysing the impact that these US tariffs will have on Japan's economy, and emphasizing that there is still heightened uncertainty here remaining on how the policy is going to impact prices and the Japanese economy. But certainly, as Kari was highlighting there, some conflicting sort of points to negotiate, whether we're talking about the yen or the underlying weakness in the Japanese economy as well. Martin.
All right, Lynn, thank you, Lynn there. Still ahead, our next guest says he's focused on earnings and attractive valuations, but how do the tariff tensions play into his strategy? Sid Jane from GQG Partners joins us right after this.
My desire to keep learning, that is what drives my ambition. I sought a career change after 5 years working in corporate law to pursue a passion, which is to tell people stories and help our audiences make sense of the world that we live in.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumptions.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by...
Leaders of business and tech talk AI. Name another industry that has a $10 trillion total addressable market. That's why everybody should be excited.
There's an accessibility to generative AI. It's unlike any technology that we've seen.
And its impact on the way we'll live and work.
To make sure that we are skilling up everyone is something we owe to society.
It's not AI or people. It's AI with people. And that will cause an economic boom.
Highlights from Converge Live only on CNBC.
Welcome back. Midweek Wednesday here on Squawk Box Station. You've probably seen the wild ride on Wall Street yet again overnight. Stocks were up sharply, then gave it all back, and then more. But here's the interesting part, right? Yields. This is how they're pricing. The 10, we are back up at 434 for all intents and purposes, edging even higher than I checked last hour. The short end 2 is at 371.32. So in other words, even with the massive drawdown we've had in stocks, the 10-year yield is back where it was. Actually, it's a little bit higher than it was before what President Trump calls Liberation Day. So go figure. CNBC's Rick Santelli has the latest in the full bond market report. Take a look.
Good morning, Asia, Australia, New Zealand. Well, tomorrow we start to get some economic data. Wholesale inventories and trade. And then later in the afternoon, we'll have the minutes to the last Fed meeting. The big data points, of course, are going to start on Thursday. And on Thursday, we're going to have CPI, and on Friday, we're going to have PPI. Those are the biggies of the week. As far as today, well, what we did have was the first of 3 auctions. We had a 3-year note auction, $58 billion, and it did not go well. Very weak demand, it tailed, and it turned the market. After 1 o'clock Eastern results, interest rates went from slightly lower on the day to higher on the day, and it was led by long maturities, and the curve steepened to over 50 basis points for the first time in 3 years. Actually, February of 22, a little over 3 years. If you looked at the equity markets, they were super strong early in the day, and as the notion of tariffs in China became the talking points of the day, it started to lose ground. It did manage to get some green back, but nowhere near the amount of green, especially in the Dow, that it had earlier in the session. When you do look at interest rates, not only did the curve steepen, but what we really want to talk about is how long rates have gotten so much more buoyant. And remember, as we focus on tariffs and try to divine if it's a one-time inflationary shock, if it happens at all, or is it more of a lingering effect? Well, we really don't know that outcome. But when you have debt and deficits the way we do, a weak 3-year note auction and 10s and 30s to follow, it certainly seems as though the longer maturities are much more alive to the upside than they have been. And I think we want to pay very close attention to not only did we hold 4% on a closing basis this week, but we are now at that 4.25 level. And should we start to close above that, after having exactly a 4% low yield close on this move, that would go a long way on the technical side to bring in more selling. Reporting from the CME HQ, I'm Rick Santelli, CNBC Business News, Chicago.
We speak to the world's most influential people.
I love what I do, and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor, and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.
Welcome back to the program. Here is another look at U.S. futures, and we do see some negative Q coming through. And in fact, just over the last half an hour or so, showing even more greater level of negativity. NASDAQ now implied down by 350 points as we speak. Sid Jain is a deputy portfolio manager at the GQG Partners with over 160 billion U.S. dollars in assets under management as of February. Sid, even the dead cat bounce that we thought we were seeing overnight, even that failed. It's scary out there. Did you buy anything over the last 4 days, or are you waiting it out? Where are you seeing alpha generation in this market route?
First of all, thanks for having me on your show, guys. Pleasure to be here. Taking a step back, for the past few weeks heading into Liberation Day, our view was take President Trump seriously when he makes these threats. And so we have been very defensively positioned and continue to be even more so now in boring sectors, so to speak, that have defendable earnings growth with strong dividend yields, places like insurance, healthcare, utilities, telecom. I would say more broadly, other than that, we're actually becoming pretty negative on the technology sector as well, where we believe these areas, the Max 7, are far more capital intensive and cyclical than people give it credit for. So we continue to be cautious. The last thing I'll say is our concern with tariffs and the political noise has less to do with the earnings trajectory, even though there will be implications, but it also has to do with the valuations for broader equities, particularly in the U.S. You're coming off the 15-year bull run, massive fiscal stimulus of the past few years. S&P 500 during the last trade war in 2018 troughed at 14 times earnings. So there could still be material multiple compression from here, which is our big concern.
Do you have a level in mind in terms of valuation for S&P 500? Because you're basically saying that there is more to go to the downside.
Yeah, so if you take a longer term view, generally speaking, S&P 500 trades at, call it 16 times earnings over a very long period. But in recessions or when there's increased political uncertainty, fears around a recession or economic slowdown, the market can go much lower. Now, I'm not saying we'll get there overnight, but the problem is most equities, particularly the favorites, the winners of the last decade, generally trade at elevated multiples. And so that remains our big concern. Less of an issue once you leave the U.S., which is why we're actually a lot more positive on some of the international countries out there. But the U.S. has enjoyed massive multiple expansion as well as margin expansion, both of which are now at risk.
And you see EMs as a great portfolio diversifier. Which particular EMs do you like? And given all the tariffs environment, do you need to get really selective here?
You're absolutely right. There's people group emerging markets as one asset class, but there's a really wide spectrum in terms of the types of countries and their exposure. So we continue to be very bullish on India. We've been that way for many years now, and so it's not due to tariffs. We like the longer-term earnings trajectory, but now they're also the emerging market that will be one least impacted amongst the majors with tariffs, because unlike China, Korea, Taiwan, India has always been a consumption-driven economy, never depended on exports to the same extent some of the other Asian countries did. So we continue to be positive on India. Other countries would be Indonesia, Brazil, and pockets of the Middle East as well, where we're finding opportunities.
All right, and quite interesting because we've got to President Trump saying that he thinks that China will make a deal at some point. We would like to ask him, when is that happening? But Sid is sticking around for more conversation with us. We'll come back to Sid Jane in just a few minutes. Squawk Box Asia is going for a quick break. We'll be right back.
To reduce the risk of injury.
AI gaming is going to be one of the most fundamental disruptions.
And new growth opportunities.
There's an opportunity for us to come together, for players to play across different platforms. I think that's really wonderful.
What do you do while you're watching sports? Not everybody likes the lean back experience. People like to lean forward and engage. Highlights from Converge Live, only on CNBC.
I took my first journalism class in high school. It felt like a superpower. I find it really meaningful to reach new audiences, women, people of color, younger demographics. A lot of traditional financial advice might not take into consideration that people have debt or that rent is so expensive. To me, ambition means taking on new opportunities that take you out of your comfort zone, but help you learn and grow.
Quick check on markets currently trading in Asia, shaping up like this. Negative pretty much across the board. We've gotten a lot of pain coming through for Nikkei 225, giving up a 3.7%. And we are waiting for, of course, the Taiwan markets to come online at the top of the next hour. Taiwan investors had already suffered from 2 days of big losses. Emily Tan is joining us. I would imagine, given the U-turn that we saw on Wall Street, more of selling, I guess, on deck.
Yeah, there's a bit of nervousness that still persists in the market. We did have extended losses coming through from the Taiwan market after what was the biggest loss in history in a single session, where the market closed down about 10%. That extended into yesterday's close. It was down 4%, a pullback of about 770 points. Some investors buying into this dip. We saw turnover come back, $16.6 billion compared to the $4 billion on Monday when we had that huge wipeout in the market. Keeping track of some of the heavyweight stocks, TSMC continued to sag, but down 3.8%. Hanhai Precision closed the limit down now for a second day running. We did see the government support coming in, the National Stabilization Fund, $15 billion coming in to support the market, saying that they are ready to support the market as and when needed. This would be the 9th intervention since the Stabilization Fund was created back in 2000. They have come in a number of times. Most recently in 2022, they intervened twice into the market, $1.6 billion across something like 275 days. But the biggest intervention was back in 2000 during the dot-com bubble, and that was an intervention of $3.6 billion into the market. So they say that they're going to be carrying out stabilization as appropriate to maintain the stability of the stock market. Yesterday, there was a lot of downside, but in the financials, we saw a little bit of strength, a couple of spots of green coming through from the likes of Mega as well as Huanan Financial. Mega shares up 7.5%.
And the short selling ban, so it's across the board. It's for this week alone. But is there any sign that maybe they would extend this? I mean, obviously, the market hasn't recovered just yet. If anything, we're watching these negotiations. If we don't have any tangible deliverables from these dialogue, then we could actually see more negativity, or at least a lot of uncertainty still out there. Is there any indication of that from the Taiwanese authorities at this point?
I think they're still watching, because we are at Wednesday today. There is more weakness in store for the market. Futures are pointed down 0.4%. So it's a short selling curb, not a ban. So they've lowered the amount in which the shares can be shorted to 3% from 30% of average daily turnover for a stock. And of course, it's in place for all of this week. And whether or not it's going to be extended, there is no mention of that just yet.
And really quickly, I was just watching Korea K-drama stocks this morning, just out of curiosity, just because some of these influencers in Beijing, in China, they were saying that China's next response to all these tariffs, it could be blocking Hollywood movies. Maybe this is something that you need to, bring up with some of the guests on your show as well.
Well, maybe there's no interest in watching U.S. films to begin with. Right now, the top 5 movies in the box office are not foreign films. They are local names.
Right.
Of course, Ne Zha is very, very popular. That has been a huge global hit. But in terms of some of the things that these bloggers are talking about, film import restrictions, banning imports of U.S. poultry, increasing tariffs on agri-products like soybean as well as sorghum. The Commerce Ministry has said that they're going to be taking steps to safeguard their own interests. So this is just what's being, talked about in social media. Nothing official just yet, but of course, movies. We'll see if that's one of them.
I don't know. Cultural decoupling, I would imagine. Emily, thank you so much for that. And Marty, it's back to you.
Yeah, thanks, Sherry. And, we were talking to our colleague Eamon Javers up over in D.C. Earlier this morning, and he was saying the paperwork had not been submitted yet for the 104% tariffs, or the extra 50, in other words, right? But that he was told by a source in the White House that the paperwork is imminent. Well, now we have reliable information telling us that, yes, that paperwork is in. The documentation is in, so there you go. We're looking at it right now. So, this says it is happening just after the stroke of midnight to Eastern time, which is 12 noon out here in Asia, Hong Kong, Singapore time. And on President Trump, we've got some lines out from him. He was just speaking at the NRCC dinner. And just to recap, he is kind of front-running that midnight deadline, saying that China is paying 104% tariff right now. It could be yet another one of these fudges that we've come to expect from him. But he says the key line, I think, from this is, he says China will make a deal at some point. Plus, he says we're going to tariff pharmaceuticals. And this is important because it had not been, at least initially, on the table there. And he also says that China is manipulating its currency to try and offset the incoming tariffs from the U.S. And obviously, this is something that we've been watching very closely as well. There's President Trump still speaking live at the NRCC dinner. We'll follow along and listen along to see what he has to say. But again, back to the issue of the currency, we're going to be watching 9:15 sharp Hong Kong, Singapore time when China fixes the midpoint of its currency, the renminbi, to see just how much weaker it allows it to go. The number you're looking at right now, H is offshore, 740.17. That is a record low for the renminbi. In the last 2-3 sessions or so, the setting in the midpoint had been gradually ever lower in baby steps. But again, the big risk that we've been talking about is whether or not China resorts to a big one-off devaluation of the renminbi, such as what it did back in Trump's first term in reaction to Trump slapping tariffs on China. So the currency is something we're continuing to watch there. All right, meantime, let's bring back Sid James, still with us live, a GG partner. Sid, I want to get on something that we were talking about offline earlier this morning, and that is back to the U.S. Why, given the drawdown, the massive drawdown we've seen in equities, right? Why is the 10-year back up where it was? In fact, it's even higher. Spring of the charts, we're past 430 again, and this is even higher than it was before what the president calls Liberation Day, when all those tariffs kicked in. What gives?
Yeah, so there are a bunch of different variables to this, and I'll be the first to caveat that we're an equity-focused shop, so might defer to some of my bond-focused colleagues on that. But Look, it could be a function of folks selling what they have and the most liquid assets, which tends to be treasuries in this sort of panic mode. There are other rumors that maybe China is finally starting to offload its treasuries in a much bigger way. I think what's more concerning for us is just the volatility. It makes it incredibly difficult for businesses to operate and take a longer term view when you're seeing these types of fluctuations on a day-to-day basis with the interest rate markets. And so that's what we're really focused on when it comes to the equity side, which is what we are focused on.
Yeah, we're showing folks the VIX right now, the volatility index, right? 52.33. I guess that's better than 60 because we were north of 60 about 24 hours ago. What is that telling you right now?
Look, there's clearly a massive amount of uncertainty in terms of what happens in the White House. Is a trade deal struck? When is it happening? And then the problem is that even if a trade deal is achieved tomorrow, which is highly unlikely in our opinion, the uncertainty won't fully go away because you will never know for sure will there be new tariffs a week from now. And so again, if you're a business operator thinking about putting a multi-billion-dollar investment on the ground, that takes a multi-year view, which is very difficult to do in this type of environment when the policies are changing on a minute-by-minute basis sometimes.
Yeah, and coming up on Friday, we've got the big financials kicking off the new season of earnings, right? And I'm wondering whether or not, all the numbers that we're going to get are kind of moot. I mean, they always are, right? They're rearview mirror. It's historical. And what the main focus is going to be is on the guidance, right? And to your point, in a situation like this, nobody can commit to CapEx, to planning, to basically, or hiring or anything, right?
You're absolutely right, because from our view, the first leg of this bear market thus far has been driven by multiple compression, but we haven't seen the next leg yet in terms of earnings starting to get cut. And that is our big concern because anecdotally, when you talk to companies offline, when you talk to suppliers, there's a significant amount of fear in the markets and in terms of how will they have to slow down on headcount, will they slow down on CapEx? And we'll start to get some signs of that this upcoming earnings seasons, but it won't go away. This is not a 1 month issue. This is a longer term concern. If you're Apple, as an example, I mean, how do you shift your supply chain anytime in the near future?
Sid, big question for you. I think you probably agree that, the trade war has only just begun, right? There's probably more to go. And I want to know, the folks looking at the market and going, if that's the case, then it looks like there's more to go downside for the market as well. And they're looking at a number of maybe an 18 PE with the EPS at $200 a share before we get any sort of real clearing. Is that, are those numbers that sound realistic to you, or do you think it's even worse?
Look, it's tough to put concrete numbers on this, but if you just look back historically, the multiples can compress far more than people anticipate, especially since we're coming off such an elevated base. I mean, it's been a 15-year run now in U.S. equities, and margins are at record highs, and you're now only starting to see that come off. And so, yes, look, if these tariffs stick the way they are, the downside could be material. We believe the U.S. is probably more at risk just given the valuation starting point, but it'll impact and ripple into most other countries in the world as well.
All right. Sid, listen, got to go. It's been great to talk. Appreciate the time. Buckle up, keep safe, and do it again very soon, I hope. Sid Jain there from GQG Partners joining us live. Pleasure. We'll take a quick break. We're back in 2.
CNBC. Live ambitiously. In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation, and startups from one place. CNBC.com/technology.
CNBC is on assignment in Barcelona as Spain once again plays host to the Mobile World Congress.
We have all this kind of wildfires everywhere. There is the need for data centers. There is the need for more computation power. There is this need for AI. There is the need for connecting the world to bring businesses together. There is the need for consumers to have faster access. And for all of this, we are kind of firefighters trying to solve that problem, but we have a leaking hose here in Europe. because the regulatory environment is not fitting.
I think it has created a different thinking. The momentum's still there. Large language model continue to be prevalent.
AI is such a compelling technology. Every country in the world is going to pursue it. I think it's an imperative that the Western world lead in innovating in this new technology. That means investing in compute so we have the best infrastructure. It means investing in data so that the models can be trained in innovative ways.
There's a difference between ambition and greed. Greed is wanting more. Ambition is wanting better, and not just better for yourself, for your family, for your community, for your country. There's no reason to want CNBC if you're not ambitious, right? If you don't want better insights, better returns. And that's not just financial, though money is a part of it. We're talking about value.
Senator, the president has been clear with me and with others that he does not intend to have exclusions and exemptions, especially given the nature of the action. If you have Swiss cheese in the action, it can undermine the overall point, which is to get rid of the deficit, achieve reciprocity.
That was a U.S. Trade Representative, Jamieson Greer, Trump's top trade negotiator, of course, coming under fire on Capitol Hill from senators concerned about the impact of the tariffs on global economy. At that same time, at the Senate committee hearing, Greer telling lawmakers that not all of the USTR's proposed fees for Chinese-built ships to dock at U.S. ports will be implemented, adding that they may not be cumulative. The USTR saying the proposals were made to address a lack of shipbuilding in the United States. Let's dig a little deeper into the implications with Parash Jain, Global Head of Transport and Logistics at HSBC Global Research. Parash, thank you so much for joining us today. Let's kick off the conversation with shipbuilding. This is an area where President Trump talked a lot about as an example of cooperation that he can have with countries like South Korea. Just give us the layout of where U.S. shipbuilding stands versus their Chinese competition.
Yeah, thanks, Sherry. And as you were mentioning earlier, if you look at the current landscape and take 2024 as an example, 71% of global shipbuilding orders were placed at the Chinese yards, followed by Korea and Japan. And put together, they are close to 95% of global shipbuilding capacity, with a handful of them are produced in Europe and India. So US, to that extent, is a non-starter. For example, last year, China produces about 1,500 container vessels, and US did 5. So with this backdrop, I mean, USTR, I mean, as you said, the original proposals was draconian to the extent that for each port call, if you're a Chinese operator carrying a Chinese-built vessels, you end up paying over $3.5 million. And that for a transatlantic route means that your effective charges would be more than 100% of your revenue. But where we stand today, our world doesn't have much choice. I mean, how will you replace 70% of the shipbuilding capacity overnight? So our view is that... Sorry, yeah, go ahead.
Sorry to cut you off. So basically, this is the level of volume that we're talking about that South Koreans and Japanese cannot fill at this point, and it's just a non-starter for, I don't know, the idea of some sort of decoupling between the U.S. and China.
At this stage, for sure. I mean, if you see how the industry has reacted after the announcement of USTR, still more than 50% of the vessel orders has still gone to China. And that tells you that even the shipping industry, despite knowing this reality, probably see China as probably one of the very, very credible alternative at this juncture. Although we started to see some price divergence where the Japanese shipbuilds are now slightly more expensive than the Chinese, But beyond that, it's here to stay for foreseeable future.
Parsh, I have to ask you a question. $3.5 million per ship, right? And there are thousands of ships that come in, right? That is going to raise a heck of a lot of money, potentially, right? You would think that the end goal would be for at least some of this money to be directed towards trying to up or increase or bring back U.S. shipbuilding capacity. Is that the actual intention, do you think? Or is this even if it is, isn't this sort of a very roundabout way of doing it?
And as you rightly pointed out, even if you start it today, it will take a couple of years before the first ship can be built, right? I mean, if you talk to some of the industry leaders, they say that on a like-for-like, a vessel built in US probably costs you 5 times more, and it takes about 3 times longer versus a ship built in Korea or Japan. So to that extent, it's a non-starter. And what you would see in a very near term, assuming the USTR goes through as proposed, you will see a chaos of epic proportion, because the shipping lines will start to drop the port calls in a second-tier ports in the U.S. They'll try to divert their cargo to Canadian and Mexican ports. And you will see a congestion building up into the port. It probably will be a COVID 2.0. And that's why overnight you heard through Reuters that there are talks going on that it will not be implemented as it is. They are probably trying to avoid the cumulative taxes. So it will be in a watered-down version, but probably it's more of a tactics of a larger trade negotiation, I would say.
Okay. Sherry.
What's your forecast in terms of a potential pickup in demand for shipping within the Asian region or Asia along with other regions, United States, given the tariff environment? Because we did just hear from South Korea's acting president, Han Duck-soo, saying that we're not going to, gang up on the U.S. With retaliation with countries like China and Japan. But I wonder if this would, lead to more busier trading between other countries, again, ex-United States.
Yeah, there will be a collateral damage. So yes, probably the import into the U.S. will hit the hardest. But if this tariff stays, we'll not rule out probably global trade declining in this year. And this year can be a year of 2 halves or 4 quarters, where we have seen a strong import growth into the U.S. in the first quarter. Probably will lead to a pause or rather a decline into the trade into US, and that will have a ripple effect across, because a lot of the trade between China, Vietnam, China, Thailand are with semi-finished goods, which are ultimately intended to be end in Europe or US. So yes, Asia will be relatively immune, but it will still face the brunt.
Gotcha. All right, Parsh, great to talk. Thanks for dropping by. Loved it. Take care and come back, see us again very soon. Parsh Jain, HSBC, joining us live. A lot more head on Squawk this Wednesday. Stay tuned. We're back in 2.
$1,500 movie. I don't want this flight to end.
Watch the markets open. Brought to you by Emirates.
What inventions have transformed humanity?
The wheel, the light bulb, the internet, and me.
Learn how to use AI to be more successful with CNBC Make It's new online course.
It's about how we embrace the technology.
What we're really talking about is automation of tasks.
You're going to feel like they were just always part of your life.
We'll give you examples and how you can use AI tools at work and in life.
Register at cnbcmakeit.com/AI.
The age of AI is now.
My mentor always told me that your career is going to be a marathon, not a race. Often, you're not the only one running. So learn from those in front, support those behind, and when it counts, win well and lose well.
One Partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any Go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can what is the status, what is their energy consumption, what is their water consumption.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by Scott Wapner from the NYSE. Closing bell, CNBC.
Welcome back. It's a midweek Wednesday here on Squawk Asia. As the clock ticks down to midnight, remember, a second past that is when reciprocal tariffs kick in the United States, because it is going to be April the 9th there. Countries are still scrambling to negotiate with Washington. Vietnam is one of them, and JP Ong is one of the countries where, you know, the talk is they're both trying to get to zero tariffs.
Absolutely, but it's going to be very, very difficult in Vietnam's case because we know they have one of the biggest trade surplus with the United States to the tune of about $123.5 billion US dollars, actually. And if you take a look at this also, Martin, you'll notice that that this is also why Vietnam has one of the biggest tariffs, 46% actually on them. So General Secretary To Lam has been on the phone with President Donald Trump, which the American president has characterized as being productive talks towards getting to these zero tariffs, or perhaps to trying to improve the trade surplus that Vietnam has with the U.S. They have extended an invitation to open talks, and even as extended an invitation for President Donald Trump to visit Vietnam in order to kickstart some of these talks. And Mr. Trump has actually said he has accepted the invitation. The question is, when might he visit, and when can these talks actually happen? Because the clock is indeed ticking. These tariffs are set to come online very soon. Now, Vietnam itself has stuck by their 8% growth, GDP growth target, actually. But again, if these tariffs do come in, it'll make it much more difficult for them to actually hit that, and could actually even imperil one of Southeast Asia's fastest growing economies, actually.
So the give and take, right? Who's likely to give what?
I think one area actually that was very interesting to note was Vietnam has now signaled that they are now open to buying more defense products from the United States. Now, if you recall, back in the 60s, they had this little tussle actually that resulted in a protracted war that really marked or shaped both countries and the history of both countries. Now Vietnam seems to be looking at the United States and actually is now open to buying more arms, perhaps defense products, security products from them, especially since an arms embargo was lifted on Vietnam, or the sale of arms, an embargo on the sale of arms to Vietnam was lifted back in 2016. Now, what's interesting also is that when you look at the source of arms to Vietnam, there are three major exporters of arms to Vietnam. That happens to be Russia, Ukraine, and Israel. Guess what these three countries have in common? They are all embroiled in conflicts at the moment, and we've also seen that based on recent data, the exports of Russian arms to Vietnam have actually trickled to about zero over the last 2 years. So there is a severe need actually for Vietnam to upgrade their military and perhaps also increase their sources actually, which means the United States can step in. But given the history of these two countries, especially that they did engage in that bloody war about 60 years ago, it's a very interesting turn of events actually. It creates new opportunities for them. But again, will that fill $123 billion?
Well, yeah, I mean, there's been a generational change since the Vietnam War, right? But you make an interesting point, right? The arms being supplied by all three of those countries, Russia, Ukraine, as well as Israel, are battle-proven, right? Mm-hmm. And they're probably cost-effective as well, would be a way to put it. U.S. arms are likely to be, more expensive, and it's not so easy to switch systems, right? When you're used to, let's say, a Russian AK, it's not as easy to switch over to something made in the U.S.
Absolutely.
I mean, in fact, parts, servicing, all kinds of things to think about.
Exactly. And in fact, this is something that a defense analyst I spoke to many years ago actually raised when President Rodrigo Duterte of the Philippines was entertaining buying Russian arms. He said, look, just because you're going to switch from an AK-47 to an M16 in Vietnam's case doesn't mean it's as simple as waking up one day and saying, hey, you have a new rifle. This is a longer rifle. You'll probably need to train with it. You'll probably have to re-augment your tactics at least and your military strategy just a little bit to accommodate these new weapon systems. So it's not like for like. So there's a few things they'll have to consider actually if they want to do this.
Okay. All right. Great stuff. Thank you, JP Ong there. All right. You're going to want to stay tuned for the rest of the Market Opens still coming up. That's happening next hour here on Squawk Box Asia. We're back in 2.
CNBC. Live ambitiously.
Swiss luxury watchmaker Omega did send their Speedmaster Professional to the moon in 1969. More than half a century later, Omega is partnering with Swiss startup ClearSpace to support a world-first initiative, cleaning up debris from space.
For 60 years, we've been putting satellites into orbit, and we essentially don't remove them.
One of these big pillars of our DNA is of course, the space odyssey. Looking at this, Omega always been very much involved in what's happening in the sky. You know, in 1962, we had the first ever Omega in space by Wally Schirra, his own Speedmaster.
Most of our economy depends on space infrastructure. We cannot live without them anymore. So what we need to do is create an environment that is just self-sustaining. We don't yet have the exact launch date. It's probably going to be more around 2028.
Sponsored by... Want to jumpstart your side hustle? Learn the skills to earn passive income online with CNBC Make It's new online course. Expert advice, real-life success stories. Register right now at cnbcmakeit.com/passive income.
If you're really ambitious, you don't think about the end goal. You're too busy thinking about the process of getting there and the growth that you need to achieve. And nothing can beat that.
It is 9 sharp Hong Kong, Singapore time, and the Singapore market is just joining Wednesday trade, opening up soft down about 1% and more. Good morning. I'm Martin Sung at the SGX.
And I'm Sherry Kang in Hong Kong. Your headlines this hour. Asian markets sell-off resumes as U.S. President Donald Trump's reciprocal tariffs are set to kick in about 3 hours from now. China, the worst hit, facing a total 104% in levies from noon today.
Meantime, President Trump accusing Beijing of manipulating its currency to offset the tariffs incoming as the offshore yuan, China's currency, hits an all-time low. We'll see how China's central bank, the PBOC, People's Bank of China, sets its daily reference rate, in other words, the midpoint, in less than 15 minutes from now.
Plus, Asian Development Bank ADB expects U.S. tariffs to hammer developing economies in this region, slashing its growth forecast by nearly a full percentage point next year.
Let's get right to markets, and the small secondary markets in Southeast Asia are getting off to a rolling start, as they always do. Out of the gate, they're not looking good. The Singapore market, usually a safe haven, is down close to about 1 3/4%. You've got Malaysia off 0.6. Taiwan continues to lose ground. It has not had a winning day yet. It is down another 1 1/4% or thereabouts. So switch over to the big markets and give you a look at how they are shaping up. Let's get to about a little more than an hour into midweek Wednesday trade. You've got Korea down about 2/3 of 1%. The Tokyo market, Japan in other words, is down close to 3%. That is roundabout session lows right now. Sherry?
And of course, with China not budging at this point, but a team of senior Japanese officials are set to kick off their talks with the Trump administration in D.C. CNBC's Kaori Joji is following the negotiations from Tokyo. And Kaori, we've got Japan sounding very cautious and careful with everything, with Japan being one of the largest foreign holder of U.S. Treasuries. They're saying we're not going to touch that. We're not selling U.S. Treasuries to influence these talks. We're not going to touch the FX reserves because it could actually look like a currency manipulation. Kaori.
Thanks a lot, Cherry. Well, I think you're referring to comments by the economics minister, the finance minister in Parliament, who's getting grilled on what's going to happen during these negotiations. And it's no secret that U.S. Treasuries, a big holder of that, not only is the Japanese government, but Japanese institutional investors as well. I think it would be suicide politically to say anything nearly remotely close to saying that they're going to unload some of those U.S. Treasuries. So I think there's that political angle to be aware of. I think everything is on the table, and by that I mean really everything. And that's why Japan is going to try to make this a full court press. Not only the economics minister, the trade minister, but also Japan Inc. You have to put that into the equation, because at the end of the day, when the tariffs roll in about, 3 hours' time, the big company Toyota and all its thousands of parts suppliers that are spread around Japan are going to hurt and possibly push this economy into a recession.
Carrie, in terms of the impact of those tariffs on Japan's economy and growth, what are some of the numbers being thrown around right now?
I'm hearing anything between minus 0.3% to minus 0.8%. So when you consider the fact that for the January to March quarter, we haven't got the official numbers yet, those could be fairly weak because consumption is expected to have been weak. These are not insignificant numbers. And it comes at a very delicate time because you have cost push inflation because of the weaker yen pushing up food prices. And finally, we're getting a little bit of wage growth and look like things were looking positive, and that the Bank of Japan may move towards normalization of interest rates. So really, Japan cannot afford this at this time.
And on the tariffs itself, and who's actually going to pay for them, Carrie? I mean, with Japanese autos trying to get into the U.S., I mean, it's the same thing, right? It could be any number of parties who end up paying for them, but ultimately passing it on to the consumer.
I think it really depends from manufacturer to manufacturer. So we know that Ferrari has said that for cars sold in the United States, they're going to hike prices by 10%. So I want to compare that to Toyota and, for example, Infiniti, which you know very well, and some of their higher end products. It's possible that for the hybrids and the high margin products, they could decide to raise prices in the United States. That will not nearly offset the 25% tariffs that the U.S. is talking about right now. The other smaller companies like Fuji Heavy Industries that relies really predominantly on the United States, this is going to be nearly impossible to offset with just passing on to the consumer. So I think that is why the Japanese government is trying to come up with a comprehensive package that perhaps includes low interest loans to help some of the suppliers get through this crunch and not face a liquidity crunch come, 6 months down the line, 12 months down the line, even earlier perhaps.
Yeah, and very similar dynamic playing out in South Korea when it comes to the government support. Kaori, thank you so much for joining us this morning. That was Kaori and Joji live for us in Tokyo. U.S. President Donald Trump saying that China is paying 104% tariffs right now, though he is preempting it by a couple of hours because there's still 3 hours to go from those country-by-country duties kicking in. Beijing staying defiant, saying it will fight till the end. U.S. Treasury Secretary Scott Bessent, though, saying China is making a big mistake by not backing down. Here is what he had to say on CNBC overnight.
I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. We are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
Treasury Secretary Scott Bessent speaking there. Now, Sherry, one of the things, of course, that we're trying to do on the show right now is longer form interviews, especially with thought leaders. And Ruchir Sharma is the chairman of Rockefeller International, also the founder and chief investment officer of Breakout Capital. His fifth and latest book is What Went Wrong with Capitalism, out late last year. He's also a prolific columnist for the Financial Times, which described him as someone with the inquisitiveness of Anthony Bourdain and the folksiness of Warren Buffett. He joins us now live. Ruchir, great to see you and appreciate your time. I want to get to the tariffs in China first, if we could. I know from following you for many years that you've been bearish on China for some time. 104% tariffs on China, and with very few options. How bad is it going to be for China, do you think?
Well, unfortunately, I think that what's happening in the world just now is that the two largest economies, China and the US, this is really going to be about them, I think, in the end. And I think that the economies that are eventually going to get hurt the most are going to be US and China. So this is very different from past episodes. You know, there is this old saying, as you know, that when two elephants are fighting in the jungle, it's the grass that gets squashed. But I think that here what's going on is that it's these two economies which I think are going to suffer the most damage because this battle is really going to come down to these two entities. Now, as far as China is concerned, for the reasons that you had said at the outset, I've been bearish on the Chinese economic model for a while, thinking that this is a model which has been far too reliant on debt to grow, and also the fact that it's not done enough to fire away its domestic consumption engine, and it's far too reliant on exports. So all that's now coming back to hurt China. The only silver lining in this, I think, and this is what we saw with Germany in Europe, is that when these countries are pushed to the brink, when they really come under such enormous pressure, it's then when these countries also begin to reform. So I think that for China, this is really an opportunity to carry out the kind of reform which is needed to boost domestic consumption and move away from this model of relying on exports to grow. So that is the one silver lining out of this. But overall, I think the two big casualties around the world are going to be US and China in this trade battle.
Yeah, Ruchir, let's flip over to the U.S. side if we could. I mean, the thesis of your book basically is that capitalism has failed recently in the last 10, 15 years because there's been way too much government spending, way too much regulation as well. This is something that the second Trump administration seems to be latching onto and trying to fix. So I want to get your take on that, but more specifically, though, using tariffs as a way to fix what may be broken. Is that the right way to go about it?
No, I don't think so. I think that, you know, like as I mentioned in the book as well, that the real problem with capitalism over the past few decades is that we have a very distorted form of capitalism. We have a capitalism today which has been extremely reliant on the government to act as both the put option and also for the fact that the government to always stimulate the economies at the slightest hint of trouble. Now, what I do agree is the fact that the U.S. economy was a sick patient. That's the description which has been used by people in the Trump administration. And in that regard, I agree that the U.S. economic boom of the last few years was a mirage. Economic growth in the U.S. had been artificially boosted by massive amount of government spending. It was unsustainable for the U.S. to run a budget deficit of 6 to 7% of GDP in the middle of an economic expansion. That's the kind of stuff which makes zero economic sense. So that was the core problem, according to me. But now, the fact is that under the Trump administration, we're seeing that the government is being even more expansionist. It's using tariffs as a tool, and the way that it's using tariffs is sort of incomprehensible. So the analogy I use here is that, yes, the patient was sick, but the patient was sick because of obesity, let's say, and instead what you're performing on the patient is lobotomy. So these are very different prescriptions and very different solutions out here. So I do agree that the U.S. economy needed fixing. This model was unsustainable. But the solution, where you have tariffs at the front and center of it, is, I think, misguided.
Ruchir, thank you so much for those words. And we've got more ahead with Ruchir Sharma in just a few minutes. Lots more coming up on Squawk Box Asia. Stick around.
Master the art of salary negotiation.
Everybody who walks into a salary negotiation is nervous.
Salary negotiations are really awkward.
The number one soft skill is flexibility,
preparation,
confidence.
Learn how to negotiate a higher salary with CNBC Make It's new online course.
I'm going to give you a roadmap for doing the hard work.
Because ultimately, if you don't fight for yourself, nobody else will.
Register right now at cnbcmakeit.com/salary.
CNBC has the most affluent audience in television, and my job is to tell viewers how the wealthy make it, spend it, and give it away. I grew up in upstate New York. Both my parents were artists, so we didn't have money, but they taught me to appreciate beauty and also see things a little bit differently. For a lot of people, their ambition is to get wealthy, but money itself doesn't have any meaning. It's how you make it and what you do with it that gives it purpose.
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
Welcome back. Midweek Wednesday here on Squawk Asia. It's just gone 15 past the top of the hour, which is when usually on weekdays, China, the PBOC, their central bank, sets the midpoint for their currency, the renminbi. And this is something we're watching very closely. So here are the numbers out, setting the midpoint today for the RMB at 720.66 versus the last close of 733.98. So this is kind of interesting. So this is actually steadier. And this is because over the last 2-3 sessions or so, they've been setting their midpoint incrementally lower, so baby steps to try and cushion, I guess, the impact of the tariffs, which, again, are less than 3 hours away from dropping. A second after midnight Eastern time or 12 noon Hong Kong, Singapore time is when those reciprocal tariffs kick in and when China gets slapped with a total of 104% tariff. So in terms of reaction, we know that China is digging in its heels and saying it'll fight to the end. Other countries, though, are negotiating. And one thing that's also happened is it's put the Federal Reserve in a bit of a tough position. Should the U.S. Central Bank cut rates to prop up growth, hit by tariffs, likely to get hit by tariffs, or keep policy steady in case inflation spikes? Well, India's central bank is caught up in the bind, same bind as well. The RBI, Reserve Bank of India, meets and decides on rates later today. As U.S. tariffs kick in, Indian bond yields are priced in a 25 basis point cut. But some analysts say there is a chance of an even deeper cut, maybe 50, or at the very least saying that they are going accommodative in terms of policy as opposed to neutral. CNBC's TV 18's Ritu Singh has a preview of that decision, which happens 12:30 p.m. Hong Kong, Singapore time. Take a look.
Amid the tariff tantrums, the focus now shifts to the central bank's next move, and respondents to our CNBC TV 18 poll of top bankers, economists and bond dealers expect the RBI's Monetary Policy Committee to acknowledge these global risks but remain firmly focused on domestic dynamics. Now, most expect RBI to front-load its rate cuts in April and June as tariffs threaten to hurt economies globally. Now, all of the respondents to the CNBC TV 18 poll expect the MPC to deliver a 25 basis point rate cut in this policy, with inflation cooling, growth slowing, the dollar weakening, U.S. yields dipping and crude prices falling. The RBI does have room to act, so the call on the rate cut is unanimous, but the question is, what else? Now, here's where opinions start to differ. Half the respondents expect a shift to an accommodative stance, signaling a more dovish RBI, but 40% think the MPC will stick with a neutral stance, keeping options open amid what is a very uncertain environment. The terminal repo rate is seen at 5.5% by the majority, and that implies a total rate cut of 75 basis points in this cycle. no major liquidity surprises are expected. Now, RBI has already been addressing tight liquidity through OMO purchases, currency swaps, higher tenor VRR auctions, and it is likely to continue doing so. Any more here is going to be seen as a positive. Now, economists expect anywhere between 30 to 60 basis point hit to our GDP because of higher tariffs. But for now, the majority expects RBI to leave the growth forecast for this fiscal unchanged, while a small section does expect a little bit of a downgrade. On inflation, which is tracking below RBI's estimates, 60% believe it is going to be left unchanged, while 40% see it being revised lower to a 4 to 4.1%. Now, the tone of the policy expectedly will be dovish in the face of emerging external risks. With inflation under control and growth headwinds building up, the RBI may just choose to lay the groundwork for further easing in the months ahead.
And we are back with Rashir Sharma of Rockefeller International. Rashir, I do want to pick up on your last point that you were making before we went to the break, that you agree that U.S. economy needed some fixing, but tariffs may not be, well, at least at this level, may not have been the ideal way to get that achieved. What would be your advice for Trump administration at this point in terms of resetting economic complacency, perhaps, and create revenue? Or actually, if you stretch it out, what do you think is the end goal for Trump and announcing all these tariffs? Because is it about revenue generation or is it about fixing the U.S. economy?
Well, I think that it's like everyone's trying to read his mind, and I think that's going to be one of the problems, that it's not clearly articulated what the end goal is. But we know from history that he has a visceral dislike for deficits. He has a yearning for manufacturing. So I think that that's what he's trying to do here, which is that he generally believes, I think, that America has been taken advantage of and that the deficit needs to be fixing. So he's got that worldview, which is very different from the mainstream economic view of the world. And I think that he's also very much enjoying this power game, which is that I think that he likes the fact that about 50 countries are running to him to try and negotiate a deal. And what was not part of his calculation, I think, was that China would retaliate because he thought China too would come to the U.S. looking to do a deal. So I think that it's a combination that, one, his dislike for trade deficits, and two, his liking for power and for using that power of both the presidential office and American power to get the kind of deal he thinks will be better for the U.S. economy. So I think that it's a very different worldview. And so therefore, so many economists and so many mainstream people are struggling with coming to terms that how can he be doing this, which, as per any regular economic textbook, is such as the wrong thing to do. So I think that we have to reconcile these two things, that the way we think and the way he thinks are totally different.
Okay. So, Rashir, listen, would it be a stretch to say, and to your book, right, that the U.S. right now is doing capitalism wrong? And the flip side to my question is, do you think there's an argument to be made that maybe China is doing socialism right? And I know you've been bearish on China for a long time, right? But, you know, in the last couple of months, right, you've had DeepSeek drop, et cetera. And I know that you think AI is going to be a huge differentiator in terms of productivity for all countries, but especially the U.S. But what about for China now that it seems to be exploding there?
Yes, Madden. So I think that I've also sort of had a bit of a change of view in China in the last few months, as I've written about, that I think that the bearishness on China had gotten too extreme. So in fact, one of the top trends that I write about every year included the fact that China is investable again. That there are companies in China which are cutting edge with a lot of technological prowess, trading at much lower valuations than U.S. companies. So my favorite trade of the year when I began the year was to be short Tesla and long BYD because of the fact that how well BYD is doing in the international markets, the kind of return profile of that company and the very high quality. So I have a lot of respect for China's technological prowess, and I think that the DeepSeek moment was a very telling moment. A bigger theme for me than even being bearish on China was the fact that this whole idea of American exceptionalism had gone to a ridiculous extreme. I called that the mother of all bubbles in December for a couple of pieces that I wrote for the FT. And my whole idea there was that the entire world was thinking that the only place where technological innovation happens is America, and 80% of all capital in the world, as far the stock market especially, flew to just America over the last 5 years. That was just insane. So America became this extremely overhyped, overvalued, and overowned market, and a lot of the other markets were being ignored, and the technological advantages that countries such as China had were also being overlooked. So I think that DeepSeek was a corrective in that. In fact, that was the first sign, really, of the American exceptionalism bubble bursting. And since then, we have seen these series of things happen where this American exceptionalism bubble now, I think, is well in the process of deflating.
Rashir, hold that thought. We're going to come back to you in just a few minutes, or Rashir Sharma in just a few minutes. For now, let's bring in Emily Tan for a preview of what's coming up on the China Connection. Ems, give us a sneak peek.
Thanks a lot, Sherry. And we're going to be talking more about what you've already been, of course, alluding to, the additional 104% in additional tariffs coming through from the United States. We've got a huge set of guests coming on the China Connection this morning, and we're going to be speaking with Perry Wong from Milken Institute. We're expecting the full tit-for-tat response coming through from China, as China says it will fight to the end. We're also going to be hearing from the European Union Chamber of Commerce in China. This as we have the U.S.-China relationship, how that's developing, whether or not, of course, we'll see growing ties between EU and China as a result. So lots coming up on the China Connection in the next half hour.
Thank you very much, Emily. Hong Kong and mainland China markets coming online in just a couple of minutes. We'll bring you the opening trades when Squawk Box comes right back.
In the age of digital disruption, get fresh business perspectives on the fast-changing world of tech, innovation, and startups from one place. CNBC.com/technology.
I've always had an ambition to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
Frank Holland, Worldwide Exchange, CNBC.
The climate crisis is a gun to our head, so we better get our act together.
We meet those at the forefront of creating a sustainable future.
Our work has been accelerating, and we've now hit 43.7 million people rather than kind of traditional charity. It's more about empowerment.
Climate change is like the internet. It gets bigger every year, it never goes away, and you have to learn to make money from it.
In the last 10 years, we've seen a very encouraging sign of much more products coming online into the market in terms of green and sustainable products.
An issue that affects every generation.
These kids, it's great they're fighting for their right to have a planet to live on. You've got to scream to be heard. You don't just sit politely and go, hi, can I have a conversation about pollution, please?
Soil is not our property. It's a legacy that's come to us from previous generations. It's very important we pass on living soil for future generations.
There is hope for the future, but only if we take action and take action now.
Join the sustainable future, only on CNBC.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that.
But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, injuries and worries and things that went on throughout my career, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience?
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
One partnership is bringing technology and modern farming together to advance agriculture and feed a nation.
We are starting with an automation platform. So a system which is controlling relevant machines, processes.
This is our prototype for the precision nutrient injector that interfaces with the Siemens platform that we're building. We're able to store over 100 different types of recipes. And on demand, the machine will actually mix it up and then deliver it to any Go bids.
It is in the same moment giving remotely access to Artisan Green at any point of time. They can see what is the status, what is their energy consumption, what is their water consumption.
The Energy Manager module from Siemens allows us to monitor the equipment, and with that we're able to make sure that the equipment's running at its 100% efficacy, and as a result, electricity costs that way.
Sponsored by
You are watching Squawk Box Asia. Markets in Hong Kong and mainland China just coming online. I keep saying the beauty shot of Victoria Harbour in Hong Kong looks a lot prettier than how the markets are looking this morning. The Hang Seng Index down, I would imagine. Let's pull up the board. Don't leave me hanging. Yes, Hang Seng Index down 3.76%. And let's take a look at the heavyweights as well. We've got, of course, these are early movers, just a couple of minutes into the trade, but we've got a lot of losses again in store. We've got Alibaba leading the losses on the board there, giving up 6% as we speak. And of course, this is a bit of a reflection of the price action that we saw on Wall Street overnight. People seem to be holding on to some kind of optimism that there will be tariff negotiations, and maybe President Trump will change his mind about especially that 104% tariffs on Chinese imports. But the rhetoric is there, and he says that he is forging ahead with 104%. Chinese markets also coming online, and we've got red pretty much across the board, and we've got the Shenzhen composite for one down about to 2.5%. We care about the currency board this week and this morning, and the offshore yuan, CNH, at a record low. And this is something that is actually President Trump is paying attention to at the moment, because President Trump did speak just a couple of hours ago saying that China is manipulating its currency in order to offset the impact of tariffs. So he's watching that definitely. And we've got the CNH at 7.3825. We'll see how the rest of the session goes. But of course, we did see the yuan fixing, the midpoint fixing just about 15 minutes ago. And it did show that the PBOC wanted to keep things stable for now, maybe don't want the yuan to fall too sharply, perhaps, Marty. So we're trying to gauge where they stand in terms of the whole speculated yuan devaluation moves potentially coming from China. Marty?
Absolutely, absolutely. We'll keep watching what happens with the RMB, and counting down, of course, still a bit less than 2.5 hours to go before those reciprocal tariffs kick in at noon Hong Kong, Singapore time, or just a second after midnight Eastern in the U.S. All right, a couple of minutes left with Ruchir Sharma. Let's get back to him. Rockefeller International still with us live. Ruchir, in terms of response to these tariffs, right? China is obviously digging in its heels and saying we will fight to the end, right? It's interesting. Japan is talking, Korea is talking with the U.S., Vietnam as well. India, we were looking ahead to the policy response from the RBI happening about 12:30 our time. They're going to have to back off on rates and put a bit more cushion in terms of monetary policy under the economy. But in terms of offsetting the impact of tariffs from the U.S., it's interesting, Ruchir. I wonder what to make of it, because India seems to have been very, very proactive, right, in terms of negotiating. They're on the ball, right, negotiating trade deals with the EU, with the UK, with the US as well. And is this one example of why you still think that India probably, among emerging markets, still has a great chance of being the first to break out, one of the breakout nations in EM?
Yes, I think that as far as India is concerned, but I think that, what's happening in India just shows you that how this crisis can be used positively by nations as well. Because one of the problems India had was that India's tariffs were too high. The country had been getting a bit too protectionist over the last few years. And what this does is it forces India to become a more open economy, as it should be, to get more competitive and to climb up the development ladder as other East Asian countries have done. So I think in that regard, this crisis has been a bit of a positive for India, because it forces it to get its act together. And it's a good example of what's happening around the world, where countries are, on one hand, coping with this crisis with the US, and India sort of is not being retaliatory. But on the other hand, I think that countries around the world are realizing that they got to keep trading, even if it's without the US. So one of the surprising data points that I put out earlier this year was that if you look at the 10 fastest growing trade routes in the world, Martin, 8 of those do not involve America anymore. 5 of them involve China and the new other countries that are involved out there. America's share in global trade has been declining since Trump's first term. So the rest of the world is learning to trade without America, to move on without America. And what India is doing here by cutting its own tariffs and doing some reforms on the trade front, which were overdue, is showing that in a crisis, you have to use that to reform your own economy. So the more that emerging markets do that, I think the better it's going to be for them. And that's my basic view, which is that the US and China are going to be the losers in this, and it's the rest of the world that will emerge as the relative winners.
Ruchir, we heard from South Korea's acting president, Han Duck-soo, while he was talking in an interview, saying that South Korea is not going to band together with countries like China and Japan in order to, retaliate, respond together in a collective manner against the U.S. tariffs. But I wonder if this is the moment where all these countries' strategies would change for the long term. Maybe they will wait it out, do something, give the Trump administration something that they might want, but really think about long term. And as you put it, move away from the U.S. and find new friends, again, in parts of the world, ex the United States. Is that the point you're trying to say?
Exactly. So I think that you have summarized it exactly the way that I'm thinking, which is that in the short term, everyone's going to try and protect their economies to the extent they can, because America is the world's largest economy by far. It is the world's largest consumer of these goods and services. So they're going to do what it takes. But in the medium to long term, and this process is already underway, I think is the interesting point from Trump's first term, that the world is learning to trade less with America. And I think that the other thing which is going to happen is that the massive amount of capital which flew into America, that capital too is going to find a new home. And I think that the most interesting development in the last couple of days has been that the dollar has continued to weaken. Remember what people were saying, that if you get tariffs, the dollar will strengthen. That's what was the consensus view as we began this year. Instead, the dollar has been weakening against most currencies around the world, and also the fact that bond yields in America this time are actually rising, even in the face of an equity market sell-off. I just can't remember when that's happened, that you've had a weaker dollar and higher bond yields as equities have been selling off this sharply over the last few days. So something is changing here in the global system, which is that people are saying that, we are over allocated to America. We need to diversify again. Diversification has been a bad word, for the last 10 to 15 years, because America has been really the only game in town in a way. Yes, India has done relatively okay, but among the larger markets, America has been so dominant. America's stock market came to represent nearly 70% of the global MSCI index, even though its economic weight is below 30%. So now that reversal of capital is also beginning. So I think that tells you about what's going on. So for me, the most interesting development in the last 24 to 48 hours has been the rise in the 10-year bond yield, a weaker dollar, at the same time that the American stock market has been weakening. That is an unprecedented mix that I've seen.
Rashir, listen, I want to, pull it broader and try and make this a little bit more global. One of the reasons, or I think one of the catalysts or triggers for this move away from dollar-based assets and this need to hedge, et cetera, has come fairly recently, right? And this is after Russia's invasion of Ukraine. This is the second time around, not 2014 in Crimea, but the second time around. After which, right, $300 billion of Vladimir Putin's money, or okay, to be fair, Russia's central bank money was seized by the West, right? That made a lot of states, but especially China, very wary of something similar happening to them, which is why they've been recycling a lot more of their $1 trillion surplus with the U.S. away from buying treasuries and into buying gold and crypto and all sorts of other things, right? Which leads me to my next question, right? With the situation in Russia and Ukraine still ongoing, I know that for a time you were very optimistic about Poland, which obviously just abuts those two states, right? As being the next breakout star in the developed world. Do you still hold that to be true? I mean, yes, it is arming up significantly, but with war literally on its doorstep, what are Poland's prospects?
Well, the Polish economy has done relatively well. So the forecast that I had made a few years ago that Poland will be the next largest economy to graduate from becoming an emerging market to a developed market, to me, still stands. It's a very difficult transition to make, but the Polish economy has done relatively well, and Polish assets are extremely cheap. The Polish equity market, because it's part of Europe, trades at very cheap valuations of single-digit PEs. So I still feel quite optimistic about Poland's prospects. I think much of Eastern Europe has done quite well economically. It's the region which has already seen some of the smaller countries graduate to becoming high-income countries. And so I think that that's the story in Europe, that it's not just about all the troubles of France and Germany, but there are countries there which have turned around, such as Greece, such as Spain, and there are countries like Poland, which has been doing very well. Even this year, its equity market has performed relatively well from a very low base, albeit, but it's done quite well. So yeah, I remain optimistic on Poland, and Poland would be one of my top emerging markets to invest in over the coming quarters and years.
Fascinating conversation. We'll come back to Rashir of Rockefeller International in just a few minutes. Squawk Box Asia is off for a quick break. We're back in 2.
CNBC. Live ambitiously.
The power plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
global markets, up-to-the-minute, front-page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they all fell for them.
I believe in getting justice.
American Greed on CNBC.
Making a fortune with tariffs, $2 billion a day. Do you believe it? I was told $2 billion a day. You know, I get hit by the press about tariffs. We're making $2 billion. This isn't 35 million, that's peanuts. $2 billion a day.
U.S. President Donald Trump there talking at the National Republican Congressional Committee, NRCC dinner, saying the U.S. is bringing in or taking in $2 billion a day from tariffs right now. Now, those levies so far have rocked global markets, obviously, and also fueled recession fears. According to the Asian Development Bank, the ADB, those tariffs will hurt economies in developing Asia. China, probably one of the worst hit if those 104% tariffs, the tariffs, a total 104%, kick in a second past high noon Hong Kong Singapore time or just past midnight Eastern time in the U.S. The ADB now sees China's growth slowing to 4.7% this year and to 4.3% next year, which is much lower than the 5% growth we saw back in 2024. Sherry?
Let's get the final word from Rashir Sharma of Rockefeller International. Rashir, we did touch on the China-U.S. competition angle in all this, but let's get real here. Which country of the two can afford more to decouple from the other? Because U.S. Scott Bessent saying that China cannot survive without access to the United States. But there are areas that the U.S. really needs China.
Yes, that's true. So I think that both the economies are going to get hurt. And as I said, that the issue here is that the U.S. also has a lot to lose because of the amount of capital that's been invested in America. You just showed a clip, for example, of President Trump saying that how the U.S. is earning $2 billion a day because of tariffs. But if the U.S. has a recession this year, which looks increasingly likely as these tariffs stick, the U.S. fiscal deficit will be 8 to 9% of GDP at least. So the U.S. may be making $2 billion out of tariffs, but the tax revenue loss that will take place if the U.S. economy slows down and slips into a recession will be far, far greater than anything that the tariffs could cover. So I think that from a macroeconomic standpoint, the U.S. has a lot to suffer here because the U.S. is so overowned by people around the world. And as they look to rebalance away from the U.S., they have more to lose. Now, China has already seen a lot of capital flight over the last few years. So it's just starting from a lower base. Both these countries need each other. And yes, the Chinese economy may suffer a big hit as well because of trade. But now it's up to President Xi. I think that what is he going to do? Which is that, is he going to use this opportunity for doing what Germany did in a way, which is to go out there and carry out more reforms, do more stimulus, try and boost consumption? If he does that, the Chinese economy will be able to withstand this better. The problem in America today is that they don't have the means to do that because their finances on the fiscal side are all quite stretched. So yes, in the short term, America has all the power. It looks like the stronger economy, but that may not be true if these policies stick, especially I think as you end up getting a fiscal deficit of 8 to 9% of GDP and the fact that inflation remains relatively sticky. So I'm not seeing this as who's going to benefit more or who can do without each other more, US or China. I think that this is in a way a mutually assured destruction kind of fight that they have gotten into out here. And it's these other economies around the world that could be the relative beneficiaries if they do what they do now, which is to sort of, yes, negotiate with the US, but move on. Rely much more on your domestic markets. Rely much more on trading with your neighbors rather than relying on the US to be the end destination for your exports.
Ruchir, I need to ask you, I mean, both sides need each other. That's pretty obvious, right? But going back to first principles, right? Is it realistic to have an ambition to have balanced trade between the two sides? Because, I mean, you know, one is the world's largest producer. The other one is the world's largest consumer. That is just facts borne out by statistics. So, you know, realistically, you can never have a balanced trade.
Yes, I think that should never be the objective in terms of trade is what it does. And I think there's one important part of this equation which is overlooked, that if a country is running a current account deficit or a trade deficit, by definition, it's also attracting a lot of capital inflows to cover that. And I think that now you can argue that in America's case, the current account deficit was too high, but let's not forget that it was attracting a huge amount of capital flows to cover that deficit. And if you reduce that trade deficit, by definition, those capital flows will also come down. And I think that that's what we're seeing just now. So the trade deficit being balanced is a worldview which belongs to another century, certainly not to the current age. And I think that, yes, the US could have made the legitimate point that we want reciprocal tariffs, but the reciprocal tariffs would mean that if the other country says that, yeah, you know, we will do zero tariffs, then the US should just say that, fine, you know, we will settle for that. But the idea that the US now is going after currency manipulation, it's going after non-trade tariff barriers and not looking at the kind of barriers that it imposes makes it a very difficult equation to solve.
Indeed, yeah. I mean, it seems like it's threatening to go full spectrum there, the confrontation. Ruchir, listen, we got to go. It's been so enjoyable talking to you. Enjoyed it very, very much. Thank you for your time. Appreciate it. And hope to see you again very, very soon. Ruchir Sharma there from Rockefeller International, joining us live for the final stretch of Squawk. All right, we're going to take a look at Asia markets as we await those tariffs to kick in at 12:01 Eastern time in the U.S. and just after that, just after high noon Hong Kong Singapore time as well. We are back after this.
My earliest ambition was to be a teacher, but I felt I couldn't afford it. My mother thought it was the highest calling, and I gave her a promise that one day I would be a teacher if I did well enough in life. It was my ambition, and I was able to achieve it. So now I can teach you so that you can be as ambitious as you want about whatever you want to do. CNBC is my home. If you love your work, well, maybe it's life itself.
The day's top stories driving Wall Street. Brian Sullivan joins Kelly Evans. Power Lunch, CNBC.
Want to make some extra money, but not sure where to start? CNBC Make It will teach you the skills to earn passive income online. Take our new online course that will help jumpstart your business idea. Get expert advice and hear real-life success stories.
Soon, you'll have the tools that you need to start your own passive income business.
We'll come back midweek Wednesday here on Squawk Box Asia. Let's catch up with Japan, the Tokyo market. Bring up the charts. Stocks are deeply in the red right now. Let's get to Lin for the damage assessment. There you go. Down about 3%, Lin.
Yeah, hey, Marty. Just ahead of the open, actually, we were not that far away from exiting out of bear market territory. However, that bounce back that we saw yesterday has not sustained, with the benchmark Nikkei 225 about 2.9% lower after about 2 hours of trade. We are seeing that renewed selling pressure on some of those sectors that were hardest hit off the back of the reciprocal tariff announcement on Thursday. So particularly if you look at the financials, whether that's the banks, the securities firms, the insurers, they are some of the worst hit today so far sector-wise. Also, we've seen a bit of a move in those pharma stocks off the back of the US president's comments that that is the sector that will be targeted next in terms of his tariff plans. A lot of these companies have spoken in recent quarters about seeing that growth in the US market going forward as well, particularly Daiichi Sankyo as well as Takeda. They have significant market share in terms of their revenue in the US as well, and then some of those commodities exposed stocks as well. Sherry.
Lynn, thank you. Just a few minutes to go before the Reserve Bank of New Zealand announced its policy decision. The RBN said is widely expected to cut rates by 25 basis points to 3.5% today and keep the door open for more easing as U.S. tariffs loom. And we've got the Kiwi dollar actually sitting at a 5-year low versus the U.S. dollar. 55.30 is what we see on the board there. And that brings us to the end of Squawk Box Asia. I'm Sherry Kang in Hong Kong.
And I'm Martin. So stay tuned. The China Connection is coming up next. We'll see you tomorrow.
Live ambitiously.
I was studying molecular biology, going to grad school. I started investing a little money for my dad, and I got bitten by the bug. I was a stockbroker, and it's fun, but we all wished we could just follow the markets and talk. My ambition was to be able to pay my bills and not have to constantly be selling. In today's world, I would urge a lot of people to get financially savvy. Squawk Box and CNBC, it is my home. It's the greatest job in the world.
Good money.
Everything seemed legit until it wasn't.
Good times.
The lavish lifestyle, the houses that they're used to.
Is never enough.
Someone who has a goofy social media presence could be laundering $4.5 billion worth of Bitcoin.
Fame, fortune, and fraud.
His stories were so good, they all fell for them.
I believe in getting justice.
American Greed on CNBC.
Kelly Evans, The Exchange, CNBC.
CNBC meets David Beckham.
For a long time, people wanted me to do the life documentary, but I'm not very good at opening up. The things that I've been through in the past, I've kind of put in a box, locked it up, and thought I'm never going to have to talk about it again. And I was happy with that. But I didn't realize how important it was for me to actually talk about this stuff. So I opened up and talked about things that I'd never spoke about before, like, you know, injuries and worries and things that went on throughout my career, you know, the sending off and how that made me feel.
When you talk about the sending off and the reaction to it, when you look back, what kind of mental resilience
Well, I'm really glad social media wasn't around back then because it was bad enough then. It was challenging, and when I look back at some of the footage, some of the archive stuff I'd never seen before, and it was hard to watch, and I get emotional talking about it.
It's 10 a.m. in Hong Kong and China. Markets looking downbeat across the board following another sell-off on Wall Street. First, your headlines. Stocks resume their slide as the trade war escalates. President Trump's 104% tariffs on China set to take effect in 2 hours from now, along with his slew of global reciprocal tariffs as countries from Japan to South Korea line up to cut deals with the U.S.
And it's very simple. We're making deals and people are paying tariffs. Countries are paying tariffs. Many countries have. They've ripped us off left and right. But now it's our turn to do the ripping.
Trump also taking aim at the Chinese yuan, which has slumped to record lows, calling China a currency manipulator. And the U.S. president also threatening Taiwan's TSMC with a 100% tax if they don't follow through with building their plants in the U.S. A very good morning and welcome to the China Connection. I'm Emily Tan. A quick check on the markets across Asia this morning, and we are seeing some fragility, some nervousness as we have the Chinese tariffs being imposed by the Trump administration, set to be an additional 104%, set to go into effect in the next 2 hours. We are seeing mostly downside play out here. The Nikkei 225 back in decline, down 2.5%, 32,192. We're looking at the likes of the Hang Seng Index, the Shanghai Composite, as well as the Straits Times, all traded down more than 1.5%. It is largely red across the board, with the exception of the Jakarta Composite. If you can remember, they were playing catch-up yesterday and closed down almost 10%. And today, a little bit of a rebound here, up 1% at 6,054. We want to drill down on what's happening in New Zealand with the RBNZ decision out just at the top of the hour. And we are looking at New Zealand's Reserve Bank reducing the OCR to 3.5%. The Reserve Bank of New Zealand sets the official cash rate at 3.5%. As the extent and effect of tariff policies become clearer, the committee says it has a scope to lower the OCR further. RBNZ says it creates downside risks for the New Zealand economy and that future policy decisions will be determined by the outlook for inflationary pressure over the near term. So we are going to be looking and watching out for the guidance from the